Good morning, students. Good morning, all of you. So, students, today I am going to discuss Ind AS 23 borrowing cost standard. So, when you look at the title of the standard, it seems like it's a cost related standard, right? It's an expense related standard, but it is an asset related standard. In this standard, we are going to talk about the borrowing cost, which are going to be capitalized, which are going to be form part of the cost of the asset, right? So, students, whenever the name borrowing cost comes into the mind, so the first impression is borrowing cost has to charge to the P&L, right? It's an expense. Borrowing cost क्या होती है? It's an expense. Borrowing cost is like an interest cost, processing fees. Okay. So borrowing cost is a cost of borrowing. And whenever you are talking about the cost of borrowing, it seems like it is a finance cost. And this finance cost should be charged to the P&L, right? So this is kind of a general principle that expense has to be accrued in the P&L. Okay. And since class 11, we are learning that if there is an interest cost has to be charged to the P&L, right? Then why a separate standard has been notified for the borrowing cost? Why? अगर इतनी सी बात बतानी होती कि borrowing cost has to be recognized as an expense, तो क्या उसके लिए अलग से कोई standard होता? We don't have standard on so many expenses because this is a general rule that expense has to be recognized in P&L. Then why there is a separate standard for borrowing cost? Friends, this standard talks about the situations. This standard talks about the treatment. This standard talks about the borrowing cost, which is not going to charge to the P&L, which is not going to charge to the P&L as an expense. This standard talks about those borrowing costs which are required to be capitalized. Means this standard talks about those borrowing costs which are going to form part of your asset. Okay. तो यहां पर स्टैंडर्ड उन बोरोइंग कॉस्ट की बात करता है जो आपका एसेट का पार्ट बनेगा, राइट? सो हियर वी विल बी टॉकिंग अबाउट दोज बोरोइंग कॉस्ट which are directly attributable to the acquisition, construction, or production of a qualifying asset, right? And those borrowing costs are required to be included in the cost of the qualifying asset, okay? In the cost of the qualifying asset. So there are two important terms in this standard. Number one is borrowing cost. Number two is qualifying asset, right? So we will discuss this in the later part of the standard, borrowing cost and qualifying asset. Very, very, very important aspect, borrowing cost and qualifying asset, okay? So students, again, going back to the overview in accounting standard, Ind AS, IFRS, what are the applicable standard? So students, in accounting standard, we have read which standard? Accounting standard में कौन सा standard था? In AS, it was AS 16. In accounting standard, it was AS 16, which was dealing with borrowing costs. Okay. In IFRS, so this is an accounting standard in AS. In IFRS, there is a which standard? IAS 23, which is dealing with borrowing cost. And we have converged IFRS, which is Ind AS. In Ind AS, it is Ind AS 23 borrowing cost. Ind AS 23, which is borrowing cost standard, right? So friends, if I talk about Ind AS versus IFRS, there is no major difference between Ind AS and IFRS with respect to borrowing cost accounting and reporting, right? In comparison to AS and Ind AS, AS 16 and Ind AS 23, there are few differences between AS 16 and Ind AS 23, right? Quickly, we will cover those differences also at the end of the standard. Right? So students, this is the overview from the perspective of name and title of the standard. The title is same, borrowing costs, right? In AS, it was AS 16. You guys have already read AS 16 in your CA Inter days. In IFRS, it is International Accounting Standard 23. In Ind AS, it is Ind AS 23, one borrowing cost, right? So these are the three standards in different kind of framework, okay? Now let's talk about Ind AS 23. Let's start the journey of Ind AS 23. And before that, let me see who all have joined. Let me see who all have joined so far. So good morning, Pradeep. Good morning, Karthik. Good morning, Anila. Good morning, Mamta. Good morning, Nisha. Good morning, Zini. Good morning, Usha. So good morning, everyone. Yes. So Ajit ji and Ashok ji, ये वीडियो सही चल रहा है? वीडियो में कोई लैग है? अजीत जी सही चल रहा है, ठीक है, बिकॉज वन ऑफ द स्टूडेंट वाज कंप्लेनिंग दैट्स व्हाई आई आस्क्ड. ओके, थैंक यू अशोक. ओके ओके ओके. यस. सो स्टूडेंट्स, borrowing cost, as the name suggests, again reiterating that borrowing cost, as the name suggests, is like a nominal account, like an expense account, right? But in this standard, we are going to talk about those borrowing costs which become part of the cost of the asset, right? Which become the asset, okay? So main principle of the Ind AS 23. What is my main principle of Ind AS 23? Main principle of Ind AS 23. Generally, borrowing costs are recognized as an expense in the profit and loss account. In the profit and loss account, right? But borrowing cost directly attributable to acquisition, construction, and production of qualifying asset. Borrowing cost directly attributable to acquisition, construction, and production of qualifying asset are capitalized as a part of the asset, or capitalized to the asset. Okay. What is meant by ACP? Have you seen the ACP serial? ACP Daya, ACP Pradyuman and Daya. So it is not that ACP. ACP means acquisition, construction, and production. Acquisition, construction, and production. Okay. What is QA? QA is not question answer. QA is qualifying asset. QA is qualifying asset. Okay. So friends, generally borrowing costs are recognized as an expense in the profit and loss. But we are not going to talk about that. If it is recognized as an expense, then there is no need of this standard. This standard talks about those borrowing costs which are going to be capitalized as a cost of the asset, okay? As a cost of the asset. Perfect. Clear? Okay, perfect. So friends, one comfort I want to give you, if you guys are still remember some concept of accounting standard 16, your life will become very easy, right? And this is one of the short and sweet standard. We have started this standard today and we will complete this standard today itself, right? So this is a very short and sweet standard, but generally the concept will be asked in exam, right? From this standard, there must be a question in the examination, either within the part of property, plant and equipment, or intangible asset, or a full-fledged question on borrowing cost itself, right? So borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset are included in the cost of the asset. Other borrowing costs are recognized as an expense. An entity shall apply the standard in accounting for borrowing cost, right? But which accounting? Whether it has to be charged to the P&L, answer is no. The accounting for borrowing cost, the initial recognition, measurement, presentation, disclosure of which borrowing cost? The borrowing cost which are directly attributable to the acquisition, construction, and production of a qualifying asset, right? So this is an exception-based standard. General rule is borrowing cost should be charged to P&L, but this is an exception-based standard which talks about which are the situation where borrowing costs are not required to be charged to the P&L, rather borrowing costs are required to be capitalized. Okay, clear? So an entity shall apply this standard in accounting for borrowing cost. Which accounting? Capitalized to the asset. Okay. It does not apply to actual or imputed cost of equity, included preferred capital not classified as a liability. Sir, in this particular standard, the title is borrowing cost. The title is borrowing cost. So borrowing cost means the cost on obtaining the loan, the cost on taking the borrowing, right? So whether cost of equity, if a company has come with an IPO, कंपनी ने IPO से फंड रेज किया, so it is a equity. So if there is a cost of equity, whether cost of equity will come under this standard for the purpose of checking capitalization, whether cost of equity will come under this standard, yes or no? Our case is saying no. What about others? Whether cost of equity will be covered under this standard? Cost of equity is not a borrowing. Anila, Zini, and Isha is also saying no. So cost of equity is an equity. It's not a borrowing. It's not a borrowing, right? So this standard talks about actual borrowing, actual debt. Okay, actual debt. But if the company has issued debentures, the company has issued debentures for the purpose of construction of the plant, for the purpose of construction of the plant, factory, the company has issued debenture. Whether those debenture cost, the cost of interest, the interest on debenture will form part of the borrowing cost. Yes. Why? Because debenture is a borrowing, debenture is a debt, debenture is a debt, right? So friends, let's say Reliance Power. Have you heard about Reliance Power? So Reliance Power had come up with an IPO in March 2008. I'm talking about 16 years ago. Okay, March 2008. They have raised money. And you know why they have raised money? They have raised money, they have raised equity for the purpose of construction of power plant. For the purpose of construction of power plant, right? Whatever money they have raised, they have deployed the money. They have deployed the money for the construction of the power plant. Now, construction of a power plant is a qualifying asset. It's an asset, construction of power plant. So this company, Reliance Power, is using the equity in the construction of the power plant. They have written this in their prospectus when they were coming with the IPO. Now, the question is whether the cost of the equity, they have incurred so many costs for raising the equity, merchant banker fees, underwriter commissions, right? So they have incurred so many fees, authorized capital increase. They have incurred so many expenditure, right? So there was a cost of equity. So whether that cost of equity will form part of borrowing cost? Answer is no, it is not a borrowing. It is an equity. It is an owner's capital. It is a share capital. It is not a borrowing. It will not form part of the borrowing cost. My dear students, please always remember the title is borrowing cost. When you have actually borrowed the money means debt, Equity is never a debt. Equity is never a debt, right? So in the examination, the examiner, for checking your knowledge, the examiner will write that the company has issued shares worth 10 crore rupees, right? and they have also incurred an equity cost of, let's say, 2 crore rupees, let's say, for example, right? And this money was deployed for the construction of qualifying asset, right? So determine the cost of the asset. And the construction cost was, let's say, 6 crore rupees. So don't get confused. It is an equity, it is not a borrowing, right? But had it been the debenture, then it will be form part of your borrowing. It is a debt. Okay. So friends, it does not apply to actual or imputed cost of equity, included preferred capital not classified as a liability. So if the company has issued convertible preference share, or if the company has issued equity share, so cost of this convertible preference share or equity share will not form part of your borrowing cost. Okay. What is imputed cost of equity? For example, I have 10 crore rupees as my owner's capital. Instead of taking a loan, I have deployed that money into the construction of a qualifying asset, right? So I cannot say that if I would not have invested my own funds and I would have invested the borrowed funds, probably I would have to pay an interest of 8%. So my opportunity cost is 8%. I cannot say that, and I cannot capitalize the notional cost of my own capital, right? So I cannot capitalize the notional cost of my own capital. So this is what the clarification is given in the standard. Friends, this standard will not be applicable to borrowing costs related to. This standard is applicable to all the qualifying asset when the borrowing is related to the acquisition, construction, and production of a qualifying asset, right? But this standard will not be applicable to a qualifying asset which is measured at fair value. For example, biological asset. Friends, a biological asset, when you read Ind AS 41, when you understand Ind AS 41, you will be able to understand that under Ind AS 41, the initial and subsequent measurement will always be at fair value. Fair value less cost to sell. Okay, it is at fair value. So standard says that if a qualifying asset itself is measured at fair value, it is outside the scope of Ind AS 23. Second, if a company has taken a loan, the company has incurred a borrowing cost, right? For the purpose of manufacturing inventory, friends, it will not form part of borrowing cost under Ind AS 23 if those inventories that are manufactured in large quantities and on a repetitive basis. If those inventories which are manufactured in large quantities and on a repetitive, right? Sir, what does it mean? So friends, for example, a company is into the manufacturing of apparels. For example, this factory is Louis Philippe factory, LP factory. Okay. So this company is manufacturing garments. Okay. So what happened? Every day, this company is manufacturing, let's say, 100 pieces of shirts every day. There are a lot of workers, a lot of employees. So they are manufacturing, they are stitching 100 shirts every day, right? So this company has taken a loan, working capital loan, for the purpose of manufacturing. Okay. So these inventories are manufactured in large quantities and on repetitive basis, right? Large quantity and on repetitive basis. In that case, the interest on the manufacturing operations, this interest will not form part of Ind AS 23 borrowing cost, and it will not be capitalized on such inventories, right? Because it is outside the scope of Ind AS 23. So friends, always remember, if borrowing is on the basis of, if the borrowing has been done to fund the manufacturing of inventories, which inventories? Inventories which are manufactured in large quantities and on repetitive basis. So this Ind AS, this interest cost will be outside the scope of Ind AS 23. It is not going to capitalize as per Ind AS 23. Is that clear? Sir, but whether if a company has taken a borrowing for the purpose of manufacturing inventory, is there any situation where the borrowing cost can be capitalized to the inventory? Answer is yes. Made to order inventory. For example, an airline company has ordered an aircraft to Boeing, right? Boeing is an aircraft manufacturing company. Okay. So for example, airline has ordered 500 aircrafts to Boeing, right? So Boeing will take around 9 to 12 months in manufacturing of an aircraft. Okay. And the aircraft cost is huge, right? It's a huge cost. It is running in crores. So Boeing is taking a loan for the purpose of manufacturing the aircraft, because they will get the money from the airline company when they will deliver the aircraft. Okay. So now to fund the operation, Boeing has taken a loan for the purpose of manufacturing aircraft, right? So these kind of inventories, right? These are made to order inventories. These inventories are not manufactured in large quantities and on repetitive basis. It takes a substantial period of time. Okay. It takes a substantial period of time also. So friends, on these kind of inventories, whatever loan the company has taken, the interest on loan has to be capitalized to the inventory if it is a made to order inventory. If it is a made to order inventory. Okay. Is that clear? So this was a scope part. This was just theoretical part, not much relevant. Friends, now we will discuss the main concept, borrowing cost and qualifying asset. First, I will cover qualifying asset. Then I will go to the borrowing cost, right? Okay. First, I am covering qualifying asset. What is a qualifying asset? Qualifying asset क्या होता है? Qualifying asset is an asset that takes a substantial period of time to get ready for its intended use or sale. Qualifying asset is an asset. Qualifying asset is an asset, right? Which takes a substantial period of time to get ready for its intended use or sale. Qualifying asset वो asset होती है जो अच्छा खासा टाइम लेती है, right, for getting ready for intended use or sale. So few students are complaining about the video. Video is getting stuck. So student, just allow me a minute. I am switching off to the another internet connection. Just allow me a minute. Is it okay now? Is it okay now? Yes. So qualifying asset is an asset which takes a substantial period of time to get ready for its intended use or sale. So let me explain you with the help of few examples. Now let's talk about the qualifying asset. Qualifying asset. As the name suggests, qualifying asset. Qualifying asset is like an incomplete asset. Incomplete asset. Or WIP asset. WIP asset. What is the difference between a complete asset and a qualifying asset? Qualifying asset is a work in progress stage of a complete asset, right? So when, for example, Abrakesh has given a contract to the contractor to construct a house for him, right? To construct a house for him. So the construction of house will take अच्छा खासा time. The construction of house will take a substantial period of time to get ready for intended use or sale. Abrakesh is intended to live in that house. or upper case is intended to sell that house once the house construction will get completed. The construction was started on 1st January 2023 and the construction got completed in 31st March 2024. It took 15 months, right? So over the period of 15 months, whether upper case can say that my house is complete, whether he can say that it is an asset until and unless it was not get completed. So till the time the construction was not completed, it was a qualifying asset. It was a qualifying asset. It was a WIP asset. Okay. It was an incomplete asset. But on 31st March 2024, when the house construction got completed, now the house is available for use. Upper case can say that, yes, it is my property, plant and equipment. It is my asset. It is my asset. Upper case will not say that it is a qualifying asset. It will be an asset. Okay. It will be an asset. So the difference between qualifying asset and asset is qualifying asset is a complete, qualifying asset is a incomplete asset. It's a work in progress asset. And the asset is a complete asset. Asset is a complete asset. Correct? So friends, qualifying asset is an asset which takes substantial period of time for getting ready for intended use or sale. For getting ready for intended use or sale. So qualifying asset, qualifying asset. I will write this qualifying asset as a QA. Qualifying asset is an asset. Okay. Which takes substantial period of time, substantial period of time for getting ready for intended use or sale. For getting ready for intended use or sale. Okay. For getting ready for intended use or sale. SPOT means substantial period of time. Acha khasa time. Substantial period of. IUS means intended use or sale. Intended use or sale. Intended use or sale. Okay. Sir, let's say there is a land. Okay. So for example, Monica has purchased a land. So Monica, when you purchase a land, whether that land was a qualifying asset or land was a complete asset. Whether that land was a qualifying asset or a complete asset. Why land was a qualifying asset? Whether you don't have the alternative use of the land. If you want to sell the land, can't you sell the land? If you want to use the land for manufacturing crops or for the growing crops, you can do that. So land is ready to use. Land is ready to use, right? So the management, the company has purchased the land and the company has also taken a loan, taken a borrowing for the purpose of purchase of that land. Now the question comes that borrowing cost, which is directly related to acquisition, construction and production. Yes, this borrowing cost is directly related. Why? Because the borrowing has been done for the purpose of purchase of land. But it is written that acquisition, construction and production of a qualifying asset. Now the question is whether land is a qualifying asset. There are alternative uses of that land. The company may sell the land as it is. The company may have purchased the land for the purpose of capital appreciation. Okay. The land is available for use right now. The second alternative use may be the company wants to construct building on that land. So the company has taken a land for the purpose of development. Okay. For the purpose of construction of factory. So friends, in that case, whether land will be considered as a complete asset or land will be considered as a qualifying asset. Friends, one thing you guys are missing. What is the last leg of this definition? Qualifying asset is an asset which takes substantial period of time for getting ready for intended use or sell. For getting intended use or sell. So what is the intention of the management? If the intention of the management is to sell the land, right? In that case, it is not a qualifying asset. But if the intention of the management is to develop the land, it becomes a qualifying asset. So my dear friends, अगर land को sell करना है, तो वो तो available for sale तो है ही ना? It is ready for use. It is ready for sale, right? But if the intention of the management is to develop the land, then it will take a substantial period of time to get ready for the intended use, for getting the intended use, right? Is that clear? Is that clear, friends? Clear or not clear? Clear or not clear? Tell me. So we'll discuss with one more example. Tejal Limited wants to open its office in Mumbai and Delhi, right? Tejal Limited wants to open its office in Mumbai and Delhi. He purchased ready to move in office in Mumbai. Ready to move in office. My question is whether this office is a qualifying asset. Whether this Mumbai office is a qualifying asset, yes or no? He purchased ready to move in office. Whether this office will take a substantial period of time for getting ready for use? Answer is no. This office is available for use when it was acquired, when it was purchased. So it is not a qualifying asset. Second, he purchased land for construction of office building for Delhi office. He purchased land for construction of office building for Delhi office. And Tejal has taken a loan for both these properties. So in the second case, when he purchased the land for construction of office building for Delhi office, whether it is a qualifying asset? Yes. Why? Because this will take a substantial period of time for getting ready for intended use or sale. Intended use. And the intended use is the construction of office building. The office building will be constructed on the land itself, right? So yes, it is a qualifying asset. Yes, it is a qualifying asset. So what is the treatment of borrowing cost? What is the treatment of borrowing cost? Borrowing cost means interest. Interest. क्या treatment होगा interest का? Since in the first case it is not a qualifying asset, so interest will be charged to P&L. यहाँ पे क्या treatment होगा? Interest will be capitalized. Will be capitalized. So in the second case, interest will be capitalized. Interest will be capitalized. Okay. Till the time. So we'll discuss this. Interest will be capitalized. Okay. Is that clear? Interest will be capitalized. Okay. Correct. Second example. Second example. The company has purchased a plot of land. And the company is dividing into land parcels. For example, the company has purchased 5,000 square yard of land, and now the company is selling 100 square yard of small land parcels, right? So the company has purchased a plot of land, dividing into land parcels and sell the land parcels. Is it a qualifying asset? Is it a qualifying asset? Whether it is a qualifying asset? Answer is no. The company has purchased a plot of land for construction of flats and then sell the flat to the customers. Whether it is a qualifying asset? Answer is yes, it is a qualifying asset. Yes, it is a qualifying asset. Okay. I hope it is clear to all of you. I hope it is clear to all of you. Yes. Clear? Is that clear? Is that clear? Okay. So friends, let's go to the presentation, PowerPoint presentation. So we talked about qualifying asset. Qualifying asset is an asset which takes a substantial period of time to get ready for its intended use or sale. Following may be qualifying asset: property, plant and equipment and investment property during the construction period, right? Intangible asset during the development period. For example, the company has taken a loan for the purpose of development of SAP software, right? And it is taking around 1 year, a substantial period of time, okay, for getting this SAP software ready for the company's usage. Okay, so this is an intangible asset during the development period. So whatever loan the company has taken and whatever the borrowing the company has incurred for the purpose of this intangible asset, it is going to be capitalized, right? Made to order inventories, made to order inventories. So India has given some fighter jet orders to the company to a company Rafale in France, right? So it's a made to order inventory. It's not like that every day, Rafale is manufacturing the missile or fighter jets. Answer is no. So it will order once, it will only manufacture once it will get an order from a particular country or from a company. Okay. So all these made to order inventories are like a qualifying asset. Sir, what is the meaning of substantial period of time? Can anyone tell me what is the meaning of substantial period of time? Can anyone tell me what is the meaning of substantial period of time? Ginny is saying 12 months. Anila is saying 12 months. Monica is also saying more than a year. Nisha is saying more than a year. Friends, whatever you are saying, it is correct in AS 16. It is correct in accounting standard. Absolutely right. But in Ind AS, it is absolutely not right. So Ind AS is silent. Ind AS is silent in this area, right? Ind AS has not defined substantial period of time. It says that the company needs to take a judgment that what is a substantial period of time. What is a substantial period of time, right? So the definition of substantial period of time can be different from a company to company, can be different from a company to company. The company needs to take a judgment and they have to clear in their accounting policy that what is a substantial period of time. Okay, it could be 1 month, 2 months, 3 months, 6 months, 8 months, 1 year. It could be anything, right? In accounting standard, it was clear that substantial period of time is more than 1 year, but in Ind AS, it was not defined. So even a 6-month period or 3 months period could be a substantial period of time, right? Sir, can a week can be a substantial period of time? Answer may be no, right? So while taking a judgment, the company needs to conclude what should be the acha khasa time, what could be the good time, right? For example, you are a CA final student. You have to do a preparation for the examination. Okay. So let's say Anila will say that I will take at least 3 months for 3 months for CA final examination. So 3 months could be a substantial period of time for Anila. For example, Usha will say that I will take at least 5 months for CA final examination preparation. For her, 5 months could be a substantial period of time, right? But nobody will say that I will take only 15 days for preparation for CA final examination. Are you getting me? So to cut a long story short, friends, substantial period of time is not defined in Ind AS. It may vary to any period, right? So 2 months, 3 months, 6 months, 12 months, 9 months, 8 months, it could vary, right? So it is on the company's judgment that what company is considering as a substantial period of time. So whatever company is considering as a substantial period of time, right? So that will be used for the purpose of borrowing cost capitalization. Borrowing cost needs to be capitalized to the qualifying asset and for the period in which the asset is getting ready for use or sale. So friends, always remember, don't get confused in examination. In exam, the question will come that the company has taken a loan for the purpose of construction of its factory. The factory construction was started on 1st April and it was completed on 30th August, 31st of August, right? So it took 5 months to complete the construction. It took 5 months, right? So don't get confused with AS 16 substantial period of time definition. It is not more than 1 year, right? You should not take an assumption that this 5 months is not a substantial period of time, and hence we are taking the entire इंटरेस्ट कॉस्ट टू द P&L. अगर वो पूरी की पूरी इंटरेस्ट कॉस्ट P&L में ही लेके चले जाओगे तो क्वेश्चन का फायदा क्या है? द क्वेश्चन वांट्स टू चेक यू that what is the interest cost you are going to capitalize. Okay, so friends, in exam question, always assume that whatever period of construction is given for a qualifying asset is given, always assume that it is a substantial period of time, right? Okay, if you will assume that it is not a substantial period of time, probably you will not get any marks. Understood? Is that clear? Is that clear? So in examination question, always assume it is a substantial period of time and you need to capitalize the borrowing cost. Okay. Until and unless question itself will say that it is not a substantial period of time. Until and unless. Okay. Is that clear? Anila is asking, sir, should we mention in this exam? No need to mention. But if you want to write, you can just write. It is better to write. But even though if you will not write, your marks will not be deducted. But it is always better to write, assuming this 5-month period is a substantial period of time, and hence this construction of factory is a qualifying asset, and hence the interest cost for the 5 months has to be capitalized as a part of the cost of the factory. Okay. Okay. Is that clear? So let's discuss one example of qualifying asset, which is illustration number 3 from ICAI study material. A telecom company has acquired a 3G license. This company has acquired a 3G license. 3G, 4G, 5G, you understand? The license could be sold or licensed to a third party. So this company which has purchased this 3G license, this license has an alternative use. If the company wants to sell this software, sell this license, not software, license, it can be sold. Or even though if this company wants to lease this license, sublease this license, the company can sublease this license to a third party also. So it has alternative uses. The company can sell this license, the company can rent this license, lease this license, and the company can also use this license in its own infrastructure project, in its own telecom business. However, management intends to use the license to operate a wireless network. It is like an Airtel. Airtel wants to use this 3G license to develop its own network. Okay. Development of the network starts when the license is acquired. And this network development will start only when the license is acquired. Okay. Identify whether the borrowing cost on the acquisition of 3G license be capitalized until the network is ready for its intended use. Now the question is whether this will be a qualifying asset, whether this is a qualifying asset. This acquisition of license is a qualifying asset. The intended use is to use this license to develop a network, and it will take a substantial period of time. एक टेलीकॉम कंपनी ने एक लाइसेंस खरीदा, 4G लाइसेंस, 3G लाइसेंस. क्यों खरीदा? क्योंकि उस कंपनी को नेटवर्क बिछाना है, नेटवर्क डेवलप करना है, सो दैट द कंपनी इज एबल टू गेट द सब्सक्राइबर्स. ओके. सो क्वेश्चन इज while that license has a multiple alternative usage, but the intention of the company is to use the license in the network project, which will take a substantial period of time. My question is whether it is a qualifying asset or it is not a qualifying asset. Whether it is a qualifying asset or it is not a qualifying asset. Nisha is saying qualifying asset. Mamta is saying qualifying asset. Uppercase is also saying that qualifying asset. Karthik is also saying that it is a qualifying asset. Anila is saying it's not a qualifying asset. Anila, what is the definition of a qualifying asset? You remember recently I took the example of land. So replace the land with license. When the company has acquired land, the land was having a multiple usage, alternative usage. Okay. So when the company has acquired the license, the intention was not to sell the license. The intention was not to earn the lease rental on the license. The intention was to use the license for developing a network infra. Okay. And the company will be able to use this license. The company will able to get the future economic benefit from this license only when this network infra will get completed. Okay. And the network infra first requirement is to get the license from the government. The spectrum license. If you will not get the spectrum license, how will you develop your infrastructure, network infrastructure? How will you install the towers? How will you install the cables? How will you do that? Right? So the intention, qualifying asset is an asset. It is a license which takes a substantial period of time for getting ready for intended use or sale. This license is going to be used in a network infra project, right? Right. Which cannot be developed without this license. Okay. And hence this license, acquisition of license is also a qualifying asset, right? So कंपनी ने अगर इस लाइसेंस को खरीदने में अगर कंपनी ने लोन लिया है तो जब तक ये नेटवर्क प्रोजेक्ट कंप्लीट नहीं हो जाता उस लोन की जो बोरिंग कॉस्ट है इंटरेस्ट कॉस्ट इज गोइंग टू बी कैपिटलाइज्ड. Okay, is that clear? Same like a land. If a company has taken a land, acquired a land, land is a complete asset, but it depends on the intention of the company. If the company intention is to sell the land, it is not a qualifying asset. But if the company intention is to use the land for the purpose of construction of the factory, it is a qualifying asset. Is it clear? Is it clear to you guys? Yes, the license has been exclusively acquired to operate the wireless network. Okay. The fact that the license can be used or licensed to the third party is irrelevant. The acquisition of the license is the first step in a wider investment project, developing the network. It is a part of the network investment which meet the definition of a qualifying asset under Ind AS 23. Clear? Is that clear? Sir, we understood qualifying asset. We understood that qualifying asset is a WIP asset. Means when this asset is acquired or when this asset is getting constructed, okay, or is getting produced, this asset cannot be used until and unless some more time it will take to get completed, right? So it is not ready for use. Ready for what use? Intended use. जो intention है company का use करने का, right? जो company का intention use करने का. Clear? Borrowing cost. What is meant by borrowing cost? What is meant by borrowing cost? Tell me what cost you can incur. You went to bank for taking a personal loan. What kind of cost you are going to incur on that personal loan? Can anyone tell me what kind of cost you are going to incur on that personal loan? Interest cost. Very good, Nisha. Processing fee. Okay. So whenever bank will give you loan, bank will also charge a transaction fee, a processing fee, right? So what is this processing fee? It is also a part of borrowing cost. It is a one-time fee. It is a one-time fee which bank will charge for processing your loan. Why? So generally, when bank will give you loan, so bank has a lot of kind of a documentation. Bank needs to carry a lot of documentation, etc., etc. Hence, bank will charge some processing fee, right, to process your loan. Because sometimes bank has to get the due diligence done for the buyer. Okay, for the buyer, or for the borrower, not buyer, for the borrower. Okay, so bank has to incur those expenses before taking a loan. So that is why when bank is sanctioning the loan, bank is taking some processing fee also. So borrowing cost means cost of borrowing, right? Which includes interest expenses, calculated using the effective interest method. So friends, let me explain you the borrowing cost with examples. Okay, the meaning of borrowing cost with examples. Borrowing costs are interest and other cost of borrowings. Borrowing costs. Borrowing costs are interest and other cost of borrowings. Example, processing fee. Example is processing fees. Okay. So now discuss what is included in the borrowing. Number one, interest, processing fee and transaction cost on effective interest rate basis as per Ind AS 109. On effective interest rate basis as per Ind AS 109. Interest, processing fee and transaction cost, any transaction cost on EIR basis as per Ind AS 109. Friends, when you read Ind AS 109, you will be able to understand this effective interest rate. But let me give you a quick example to make you guys understand about the effective interest rate. Okay. Let's say the company has taken a loan from State Bank of India, loan from SBI for rupees 100 crores. Okay. Rate of interest 10%. Rate of interest is 10%. Processing fee 5 crore. Paid at the time of loan, when the loan was granted, and this is repayable in 1 year. Okay. The company has taken such loan on 1st April 2023 for the purpose of construction of its office building, which gets completed on 31st October 2023. Calculate borrowing cost to be capitalized on such building. If this would have been the question in accounting standard 16, AS does not talks about the effective interest rate. AS only talks about you have taken 100 crore of loan, right? You have taken 5 crore of processing fee. Okay. So since you have taken the processing, you have paid the processing fee when you have taken the loan for the purpose of construction of the assets. So probably under accounting standard, the entire 5 crore needs to be capitalized. Okay. And 100 crore multiply by 10%, multiply by the time the money has been used for the construction. So that will be your borrowing cost. Okay. On the time proportion basis. But in Ind AS, the concept is effective interest rate, EIR. What is EIR? EIR means EIR is an interest rate which makes the inflow and outflow, which makes the inflow and outflow into equilibrium. Right? What does it mean? It means whatever net cash flow I'm getting, if I will compound with the interest, I will get the net outflow. Okay, I will get the net outflow. मतलब मुझे कितना पैसा मिल रहा है और मैं कितना पैसा दे रहा हूं, जो उसका रेट है, जो उसका डिफरेंस है, that is your effective interest rate. That is your effective interest rate. Okay. So your inflow and outflow, so the rate which will match your inflow and outflow is known as a effective interest rate. So in this case, now calculate EIR. While you will discuss this in detail in Ind AS 109, but just as a concept, let me explain you. What is your inflow? What is your inflow? Tell me, inflow कितना हुआ जब लोन लिया तो? What is your net inflow? What is your net inflow? Net inflow at the time of taking a loan. Everyone is saying 95 crore. Very good. Everyone is saying 95, 100 लिया minus 5 दिया, 95 crores. Okay. This is what? This is my inflow, net inflow. How much is the outflow? How much is the outflow? Tell me. Sir, there are two outflows. Number one, principal payment. How much principal I need to pay? How much principal I need to pay? 100 crore. How much interest I need to pay? 10 crore. What is my total outflow? What is my total outflow? What is my total outflow, my dear friends? My total outflow is 110 crore. Okay. My total outflow is 110 crore. What is excess payment I'm making? What is excess payment I'm making? What is excess payment I'm making? 110 minus 95. Yes, 15 crore ही है ना? 10 crore is interest and 5 crore is a processing fee. 15 crore. So what is my effective interest rate? What is my effective interest rate? My effective interest rate is I am paying 15 crore over an amount which I have given for utilization. I have given a corpus of 95 crore and on that I have paid 110 crore. Okay. So my effective interest rate is not 10%. I have end up paying 15.79%. 15.79%. So if I will multiply this 95 plus 95 multiply by 15.79%, this will give me 110 crore, right? So this is my EIR. This is my EIR. Now, what is the period of qualifying asset? Now, what is the period of qualifying asset? Tell me. What is the period of qualifying asset? 1st April to 31st October. 7 months. 7 months. So what is the interest cost for interest cost which is going to be capitalized? Interest cost to be capitalized. To be capitalized is how much? How much? Interest cost to be capitalized is how much, friends? Tell me. कितनी interest cost capitalize होगी? 95 crore multiply by 15.79% multiply by 7 divided by 12. This is 8.75 crore is the interest cost which is going to be capitalized. Which is going to be capitalized. I hope this example is clear to all of you. This example is clear to all of you. Example. and this calculation, how this has impacted my borrowing cost. I believe this is clear to all of you, my dear friends. Is that clear to all of you? Solution. Any doubt to anyone? Any doubt to anyone? Whether anyone is having any doubt? So Ginny has confirmed, sir, very much clear. I believe it is clear to all of you, my dear friends. Okay. So you understand, in accounting standard, the concept of EIR was not there. The concept of time proportion basis was there. But in Ind AS, you have to compute the effective interest rate, and you will be able to understand this in detail, right? When you read Ind AS 109, you can see it is written that interest processing fee and transaction cost on EIR basis, as per Ind AS 109, as per Ind AS 109, correct? The second part, now let's discuss the second part. Interest on lease obligation as per Ind AS 116. Interest on lease obligation as per Ind AS 116. What does it mean? What does it mean? Have you seen any construction site where a lot of heavy machineries are there? Have you seen any construction sites? Heavy machineries like cranes, mixer machine, lorry. Have you seen those kind of heavy machines on the construction site? Yeah. So friends, for example, there is a company, right? And this company is constructing a factory. A Limited is constructing a factory. Okay. A Limited is constructing a factory. And for construction, A Limited needs a lot of heavy machineries and equipments. Okay. So for the construction of the factory, the company has taken a crane and other equipment on a lease basis for 2 years. Okay. So A Limited is constructing a factory. A Limited is constructing its factory. For this purpose, A Limited has taken cranes, lorries, and heavy equipment on a lease for a period of 2 years. For a period of 2 years. Okay. Friends, if the company has taken the equipment on a lease basis, right? So first of all, why this company has taken this equipment? These companies have taken this equipment on a lease basis for the purpose of helping in construction, because this company is required these heavy machineries to facilitate the construction of the factory. So means these assets are dedicated, used for the construction purposes. Okay. Means this is a directly attributable cost. So what company will pay? What company will pay to acquire these cranes, lorries, and heavy equipment on a lease? What company will pay? Company will pay lease rental. Very good. Company will pay lease rental. Okay. Friends, you remember in our AS 19, we have understood a concept of finance lease. आपको finance lease का concept याद है? Have you been able to remember the concept of finance lease? Anyone who remember the concept of finance lease from the lessee perspective? Is there any students? Is there any student who remember the concept of finance lease? Nisha, are you aware about the concept of finance lease? for the lessee?
The lessee recognizes an asset and liability at the same time, sir.
Yes.
And yeah.
Yes, you are absolutely right. So the lessee, in case of a finance lease, the lessee recognizes the asset in his books of accounts, and the lessee also recognizes the lease obligation, lease liabilities, which is like a borrowing. Okay, lease liabilities. Friends, I will be covering Ind AS 116 also. And when you read Ind AS 116, you will be able to know that in Ind AS 116, whenever the lessee is taking any asset on a lease basis, right? The lessee has to do the finance lease accounting. Okay. Sir, what is meant by finance lease accounting? It means the lessee has to recognize, the company, this A Limited, the lessee has to recognize right of use asset and lease obligation on leasehold equipment as per Ind AS 116, right? So the lessee, in this case, the company, which is A Limited, needs to recognize right of use asset. For the time being, just remember only asset. The company needs to recognize right of use asset and lease liability on the leasehold asset taken on lease for 2 years. The lessee recognizes the right to use asset and lease liability on the basis of present value of future lease rentals. Okay. For example, in this case, for example, let's say the company is paying a lease rental of rupees 1 lakh per annum. Okay. Assuming the discount rate is 10%. Okay. Compute the borrowing cost to be capitalized to the factory. A Limited is constructing its factory. For this purpose, A Limited has taken cranes, lorries, and heavy equipments on lease for a period of 2 years. The company is paying a lease rental of rupees 1 lakh per annum. Assuming the discount rate is 10%, compute the borrowing cost to be capitalized to the factory. Okay. So friends, what is the accounting in Ind AS 116? I'm just quickly covering this accounting. So year 1, 2, amount, rent paid, 1 lakh. Okay. PV, present value factor, 1 divided by 1.1, this divided by 1.1. Okay. PV, present value, this multiply by this. Total. Okay. So what is the accounting entry this company will pass? The company will create an asset, right of use asset, on leasehold asset, right of use asset debit to lease liability. At what value? 173,554, 173,554. Okay. Now, the company has created lease liability for 173,554, but the company will pay an amount of rupees 2 lakh. What is the difference? So the company has to pay 2 lakh. but the liability the company has recognized on day one is 173,554 only. It means the difference is interest. The difference is interest, right? So again, I'll make a table. Year 1, 2. Okay. Opening balance, opening liability. What is the opening liability? 173,554. Interest cost. Interest cost. What is interest cost? This multiply by 10%. Payment. Rent payment. Rent. How much is the rent paid? 1 lakh. Closing balance. Closing balance. Right? This will become your opening balance. Then interest multiply by 10%. Then payment on the second year. Then your closing balance will become 0. So what is your interest cost in this case? What is your interest cost in this case? 26,446. So how much interest cost is going to be capitalized? How much interest cost is going to be capitalized? So in this case, solution. The company needs to recognize right of use asset and lease liability for the leasehold asset taken on lease for 2 years. The company needs to recognize interest cost on lease liability, okay, for 2 years. Yes. Hence, the interest cost to be capitalized is rupees. How much is rupees? How much? 26,446. I hope it is clear to all of you that if any asset which has been taken on a lease basis is used for the purpose of construction of a qualifying asset, in that case, as per Ind AS 116, it says that the leasehold asset has to be capitalized like a finance lease. The leasehold asset is required to be capitalized in the books of the lessee, and lease liability is also going to be created. Okay. So whatever interest you are paying on the lease liability, it will be capitalized during the period of qualifying asset. Okay. Clear? Is that clear? Now we are moving to the third aspect. Very, very, very important aspect, right? Very, very, very important aspect. Exchange difference on foreign currency loan to be considered as an adjustment to insurance cost. Sir, what does it mean? Adjustment to interest cost, not insurance cost, interest cost. Okay. What does it mean? Friends, have you seen the companies are taking a loan from foreign currency? Have you seen the companies are taking a loan in foreign currency? If you see the annual report of many big companies, they have a external commercial borrowings. They have a external commercial borrowings. Okay. They have foreign currency borrowings. So what is the benefit of taking a foreign currency borrowing? What is the benefit of taking a loan in foreign currency?
Lower interest rates, sir.
Lower interest rate. For example, if you go to Dubai, Middle East, right? If you buy a house in India and you will take a home loan, the interest rate is roughly 9 to 10%. But if you will buy a house in US or in Middle East, the interest rate is roughly 2 to 3%, right? 2 to 3%. Yesterday, I was talking about a person who is living in US. He was telling me that my rental income is more than my EMIs. Okay. So whatever rental income I am earning, it is more than whatever EMI I am paying on the home loan with which I have purchased a house in US. So friends, in US or Middle East, let's say the rate is 2 to 3%. In India, it is 9 to 10%. Right? So if this is the scenario, everyone will start taking the loan from the foreign countries. No one will take the loan from India. So we all agree there is a benefit. The benefit is lower interest rate, but there is a risk. There is a risk which is associated with foreign currency borrowing also. What is the risk? What is the risk?
Exchange fluctuation, sir.
Exchange fluctuation is the risk. For example, today you have taken a foreign currency loan. Today you have taken a foreign currency loan for 1 lakh US dollar at the rate of 80. So what is the amount you are getting? What is the amount you are getting for your use? So 1 lakh dollar multiplied by 80, 80 lakh rupees. 80 lakh rupees. Okay. You have to pay 1 lakh dollar only. So you are using 80 lakh rupees for the purpose of in your business. After 1 year, you have to repay 1 lakh dollar. And at that point of time, US dollar become expensive and rupee become cheaper. So now this 80 becomes 90. So what is the outflow in your hands? What is the outflow from your pocket? 1 lakh dollar multiplied by 90. 90 lakh rupees. So as a principal repayment, you took 80 lakh rupees, you are paying 90 lakh rupees. Okay. As a principal. Interest you have to pay. Interest you have to pay additionally. But if you would have taken a loan from State Bank of India, this 80 lakh rupees, if you would have taken in India, so do you have any exchange risk? Do you have any exchange risk?
No.
There is no risk. You took 80 lakh rupees and you have to repay 80 lakh rupees as a principal. Correct? No risk. And friends, while I am taking an example in this CA final session, you feel like, sir, the interest rate is very cheap. Kitna badhega dollar ka rate, right? It is better that everyone should go for foreign currency borrowing. But when you live down to the practical world, you will find that, and let me give an example. In 2022-23, I'm talking about 22-23. If you see the balance sheet of aviation companies, airline companies, in 22-23, the dollar become expensive by 750 basis point and the rupee becomes cheaper the rupee becomes depreciated. The rupee was depreciated by 750 basis points, right? And the biggest cost line item in the books of the airline company was foreign exchange loss. Foreign exchange loss, right? So friends, there are two situations. Number one, a company which is taking a loan for the purpose of construction of the asset, construction of PP. The company is taking a loan from India. The company is taking a loan from India. The company is paying interest, and that interest is going to be capitalized, which is a higher rate of interest. The second company is taking a loan in the foreign currency from USA. Okay. The company is paying an interest. The company is paying an interest. Okay. And the company is having a exchange risk also, foreign currency fluctuation risk also. The standard says that interest is a borrowing cost. It is going to be capitalized over the qualifying asset period. But you are also required to capitalize the exchange difference. Exchange difference on foreign currency loan, right? To the extent you will consider this as an adjustment to interest cost. To the extent you will consider this as an adjustment to interest cost. For example, let's say I have taken a $1 lakh of loan. I have taken a $1 lakh of loan. Okay. The interest rate is 2% from US. In India, the interest rate is 5%. Okay. On the date of loan, the rate was 80 rupees. 80 rupees. Okay. So friends, if I have to take a loan from India, how much money I need to borrow? $1 lakh loan I have taken in foreign currency. So what is the amount in INR? 1 lakh multiplied by 80 lakh rupees probably. 80 lakh rupees, right? अगर मैंने $1 लाख का लोन लिया और 80 रुपए का रेट था, मतलब मुझे 80 लाख रुपए चाहिए थे, तभी मैंने $1 लाख का लोन लिया ना। तो अगर इंडिया से लेना होता तो कितना लेता है? 80 लाख रुपीस लेता। इंडिया में मैं कितना इंटरेस्ट पे करता, हाउ मच इंटरेस्ट आई विल पे इन इंडिया? 80 lakh multiplied by 5%. What is the amount? What is the amount? 4 lakh rupees. The amount is of 4 lakh rupees. 80 lakh multiplied by 5%. In US, it is $1 lakh loan. 2% is the interest rate. So what is the interest expense in dollar? 1 lakh multiplied by 2%, 2000. It is 2000. $2,000. Assuming that rate is 80 only when I have paid the interest. The rate is 80 only when I paid the interest. So what is 2000 multiplied by 80? What is 2000 multiplied by 80? Interest expense in US dollar. 2000 multiplied by 80. Interest expense in INR. What was the interest expense in INR? 4 lakhs. What is the difference? What is the difference? Difference is 4 lakh minus 1,60,000. So standard says that the exchange loss, the exchange difference, to the extent of the difference between interest expense in INR and interest expense in foreign currency. So to the extent of that difference, if there is any exchange difference is there, to the extent of that difference, it will be treated as an adjustment to interest cost. It will be treated as an adjustment to interest cost. Means, for example, when I took the loan, the rate was 80. At the year end, the rate becomes 85. At the year end, the rate becomes 85. So how much forex loss I need to incur? $1 lakh का लोन लिया. Now it is a monetary item. I have to restate the foreign currency liability. The rate becomes 85. The rate become 85. 80 to 85. What is the loss on the principal? You remember, forex liability को आपको restate करना पड़ता है ना at the rate of closing rate. So $1 lakh is my rate, is my amount of loan. 5 rupee, I have a loss. Why? Because the dollar becomes expensive. 5 lakh. So friends, in this case, out of 5 lakh, 2,40,000, in this case 2,40,000, I will consider as an adjustment to interest cost, and 2,60,000 I will debit to the P&L as an exchange loss. Okay, I will debit to the P&L as an exchange loss. So let me explain you. Let me explain you illustration number 6 from ICAI study material, so that this concept will get more clearer to all of you. I hope the illustration number 6 is visible to all of you, friends. Is it visible to all of you? ABC Limited has taken a loan of USD $20,000 on 1st April 2001 for constructing a plant at an interest rate of 5% per annum payable on annual basis. Okay. So what is the amount of loan? $20,000. And what is the time? On 1st April 2001. What is the purpose? For construction of a factory, a plant. Interest rate is 5% per annum payable on annual basis. $20,000 multiplied by 5% means $1,000. On 1st April 2001, the exchange rate between the currencies, that is USD versus rupee, was 45 per USD. Means when the loan was taken, that time 45 rupee was equal to $1. It means how much money this company has received in INR? 20,000 multiplied by 45, 9 lakh rupees. The exchange rate on the reporting date is 48 rupees per USD. So rupee was depreciated and the dollar become expensive by 3 rupees on the reporting date. Okay. The corresponding amount could have been borrowed by ABC Limited from State Bank of India in local currency at an interest rate of 11% per annum as on 1st April 2001. Okay. as on 1st April 2001. So if the company would have borrowed this loan in INR, so rate of interest would have been 11%. In foreign currency, it is 5%. In INR, it is 11%. Compute the borrowing cost to be capitalized for the construction of plant by ABC Limited for the period ending 31st March 2002. Whether question is clear to all of you? Anyone to whom the question is not clear? Anyone to whom the question is not clear? Yeah. Anyone to whom the question is not clear? It is clear. Friends, so let me solve this question for all of you. Let me solve this question for all of you, right? Illustration number 6 of ICAI study material. Can I go to my Excel file? If question is clear to all of you, can I go to Excel file to solve this question? This is the information given in the question. This is the information given in the question. Okay, so let me remove this. This information is given in the question. Foreign currency loan 20,000 US dollar, rate of interest 5%, spot rate 45 INR, closing rate 48 INR. Indian currency loan from SBI. If this company would have to take a loan, so how much loan this company will receive in INR? Will take in INR $20,000 multiplied by 45, which is the rate on the date of loan. The rate of interest in INR is 11%, right? So this is the information given in the question. We need to compute the borrowing cost. Let's start the question. Step number 1. What is my step number 1? What is my step number 1? Friends, calculate interest on foreign currency loan. Calculate interest on foreign currency loan is my step number 1. I have to compute interest on foreign currency loan. How can I calculate interest on foreign currency loan? What is my interest on foreign currency loan? 20,000 USD multiply by 5%. Correct? 20,000 US dollar multiply by 5%. Okay. So how much is the amount? $1,000. 1,000 USD is the amount. Okay. 1,000 US dollar. So convert in INR. Convert in INR. Because you have to record the expense in your books of accounts in INR, na? So this interest is payable on annual basis. Interest is payable on annual basis. When this interest was going to be paid, what is the closing rate? What is the closing rate when this interest is going to be paid? 45 was the rate when the loan was taken. After 1 year, the company has to pay the interest. What is the rate on the date when the company has to pay the interest? You are right, Ginny, it is 48. It is 48. So 1,000 multiply by 48. Multiply by 48. 48,000 is the amount which the company has to pay on the foreign currency borrowings. Step number 2. What is my step number 2? What is my step number 2? Compute exchange difference on foreign currency loan. Compute exchange difference on foreign currency loan. So what is my exchange difference on foreign currency loan? 20,000 foreign currency liability I need to restate, right? 20,000 multiply by 48 becomes the closing rate. Opening rate was 45. So what is the foreign currency exchange difference? What is the exchange difference? In this case, I have incurred an exchange loss. Exchange loss of how much? Exchange loss of 20,000 multiplied by 3. 60,000 loss I have incurred. 60,000 loss I have incurred. Friends, tell me, what is the total cost? What is the total cost I had to incur for this foreign currency borrowing? I got a lower interest rate, but I also have to face one risk. What is the cost of that risk? 60,000. What is the cost of the fund? 48,000. What is the total cost? What is the total loss? 1,08,000. Very good. Step number 3. Step number 3. Calculate interest on Indian currency loan. Calculate interest on Indian currency loan. Means 9 lakh I need to take in INR, multiply by 11%. So what is my interest on Indian currency loan? What is my interest on Indian currency loan? 99,000. 99,000. Okay. Step number 4. Savings in interest cost due to foreign currency loan. Step number 4. What is my savings? What is my savings? Just a minute. What is my savings in interest ड्यू टू फॉरेन करेंसी लोन? मुझे कितनी सेविंग हो रही है इंटरेस्ट में ड्यू टू फॉरेन करेंसी लोन? इंटरेस्ट इन आईएनआर, इंटरेस्ट इन आईएनआर is 99,000. Interest in USD is how much? It is 48,000. So what is the savings? Savings are 99 minus 48, 51,000, right? 51,000. So 51,000 is my savings. What is my exchange loss? What is my exchange loss? Exchange loss is 60,000. So friends, whatever saving you have done in your interest cost, right? So assume the exchange loss to that extent as an adjustment to interest cost. Assume the exchange difference to that extent as an adjustment to interest cost, right? So let me tell you what is amount which is going to be capitalized as an interest cost, as a borrowing cost. So interest on foreign currency loan, okay, your exchange loss, exchange difference. Particulars. What is amount which is going to be capitalized? The entire interest cost is going to be capitalized, which is 48,000. And the exchange difference, which is going to be capitalized, is how much? 51,000. Okay. 51,000 exchange difference is also going to be capitalized. Okay. So the total borrowing cost to be capitalized is 99,000. What is going to be recorded in P&L? In P&L, zero interest and 60,000 minus 51,000. 9,000 is your exchange difference in P&L, right? This is your total. I hope it is clear to all of you, friends. So friends, in borrowing cost, we have discussed 3 parts. Part number 1, we have discussed that borrowing cost are interest and other cost of borrowing, right? So if you are paying interest and other cost, you have to compute the interest on EIR basis, effective interest rate basis, right? And you have to compute the borrowing cost. If you have taken any leasehold asset for the purpose of construction of a qualifying asset, so interest on lease liability will become part of your cost of the asset. And if you have taken a foreign currency loan, in that case, whatever savings you are making on the foreign currency loan, and if there is an exchange loss, so exchange loss to the extent of saving will be considered as an adjustment to interest cost and is going to be capitalized. Friends, we have discussed these 3 aspects now, right? So we have discussed borrowing cost. It is like a heart of the standard. we have discussed and understood the borrowing cost. There are three areas which we have discussed in the borrowing cost, and we have also discussed qualifying asset. Okay, we have discussed qualifying asset, right? So you remember borrowing cost, which is directly attributable to the acquisition, construction, and production of a qualifying asset, right, is required to be capitalized as a part of the cost of the asset. So borrowing cost is important and qualifying asset is important. These two definitions are extremely important to understand this standard, right? So we have covered these two aspects in detail with the help of example in Excel and with the help of illustration, right? We have understood these two aspects in this particular standard, right? Okay, is that clear, my dear friends? Is that clear? So the solution from ICAI study material is also on your screen, whatever I have discussed. So this is the solution. Okay. Friends, it's 8:37 now. Let's have a 10 minutes break and we will start at 8:48. Okay. Yes. So friends, we have understood so far that what is my borrowing cost, which borrowing cost is going to be capitalized, what is my qualifying asset. So we have understood these critical and important concepts. So now the recognition criteria, it is just a theoretical concept. So first of all, only those borrowing costs which is directly attributable to the acquisition, construction or production of a qualifying asset are required to be capitalized to the cost of the asset. Means, for example, if you are taking a home loan, okay, you are taking a loan for the purpose of construction of a house, for example. So this loan is directly attributable to the construction of the house. Means directly attributable means had this asset not been constructed, the loan would not have been taken, right? अगर ये asset नहीं होता तो ये loan भी नहीं होता, right? This is the meaning of directly attributable. And when a borrowing cost is capitalized to the cost of the asset, same condition. Future economic benefit should be probable and cost can be measured reliably. Same condition is there, right? You remember when I was teaching PPE standard, I have told that the two condition for an asset recognition will always be there. One, future economic benefit is probable and the cost can be measured reliably. Not relevant from the examination perspective, but yes, a theoretical concept that a borrowing cost which is directly attributable to the acquisition, construction, and production of a qualifying asset is required to be capitalized as a cost of the asset. Directly attributable means अगर ये asset नहीं होता तो ये borrowing भी नहीं होती, right? And this is required to be capitalized only when it is probable that future economic benefit will be there and the cost can be measured reliably. Friends, now the measurement of the borrowing cost. Measurement. So far we understood that the borrowing cost has three legs, right? So now we are going to talk about the measurement of the borrowing cost, right? So there are two kind of borrowing cost. There are two kind of borrowings. Number one, you want to construct a factory. You went to SBI and you told SBI that, sir, please give me a loan of 50 crore rupees. And SBI is charging an interest rate of 10%. 50 crore rupees. So what is your borrowing cost? What is your borrowing cost in this case? What is your borrowing cost? Your borrowing cost is how much? What is your borrowing cost per annum? 50 crore is amount of loan. 50 crore is amount of loan and 10% is rate of interest. What is your amount of borrowing cost per annum? Your amount of borrowing cost is 50 crore multiplied by 10%, which is 5 crore, right? 5 crore. Is it a specific borrowing or is it a general borrowing? You have taken the borrowing for the purpose of construction of factory. Is it a specific borrowing or is it a general borrowing? It is a specific borrowing. Very good. It is a specific borrowing, right? So in case of a specific borrowing, whatever cost you have incurred for the purpose of that borrowing, whatever cost you have incurred, that cost will be capitalized as a cost of the asset, right? So in case of a specific borrowing, whatever borrowing cost you are incurring on that borrowing is going to be capitalized as a cost of the asset, right? Sir, for example, 50 crore I have taken as a loan for the construction purposes. I will not spend 50 crore in one go, right? While I took a loan from the bank, the money was credited in my account and I'm using this 50 crore gradually, right? So I don't need the entire 50 crore on day one, and hence I have also done a small amount of investments, small amount of fixed deposits. I have placed 7 days deposits, 30 days deposits, 6 months deposit, 3 months deposits. So I'm also generating some interest income, right? While I'm paying 5 crore rupees of interest per annum, 50 crore multiplied by 10%, but I'm also generating some interest income. So let's say from a small investment, out of the surplus fund, out of this 50 crore surplus fund, which is not yet utilized, I have generated 50 lakh rupees of interest income during the year. My interest cost is 5 crore. My question is, what is the borrowing cost in this case? Standard says that if it is a specific borrowing, then your borrowing cost is equal to actual borrowing cost incurred minus temporary income, right? So whenever the funds are borrowed specifically, your borrowing cost is equal to actual cost incurred less any income earned on the temporary investment out of such borrowings. Okay, is that clear? Is that clear, my dear friends? Is that clear? Okay, so specific borrowing is equal to borrowing cost, right? Which is actual cost on borrowing minus temporary income, right? So friends, let's discuss illustration number 7 from ICAI study material. Alpha Limited on 1st April 2001 borrowed rupees 30 lakh at the rate of 9% to finance the construction of two qualifying assets, factory building and office building. Construction started on 1st April 2001. This company has taken 30 lakh rupees of loan at the rate of 9%. And this company has to construct factory building and office building. The total amount spent in factory building is 5 plus 5, 10 lakh. And office building is 10 plus 10, 20 lakh. The loan facility was availed on 1st April 2001 and was utilized as follows with remaining funds invested temporarily at 7%, right? So the company has taken the loan of 30 lakh rupees on day 1. So 30 lakh rupee credited in company's bank account. Now on 1st April 2001, the company has spent 5 lakh rupee on factory building, 10 lakh rupee on office building. So how much money the company has left with on 1st April 2001? From the borrowed funds, how much the surplus fund was there on 1st April 2001? 30 lakh लिया और 15 लाख रुपए खर्च कर दिए. So what is the remaining fund? What is the remaining corpus? 30 minus 5 minus 10. 15 lakh is the remaining corpus, correct? 15 lakh is the remaining corpus, correct?
Sir, chat has been disabled.
Sorry?
Chat has been disabled.
Chats has been disabled. Okay. So you can write on that portal. Okay. In that case, you can write on that portal. Okay. So I need to compute the borrowing cost. And whatever surplus fund is there, that surplus fund needs to be invested at the rate of 7%, which is given in the question. Right? So on 1st April, 5 lakh and 10 lakh. And on 1st October, after 6 months, the company has again invested 5 and 10 lakh, remaining 15 lakh on 1st October 2001. Calculate the cost of the asset and borrowing cost to be capitalized. So in this question, if you will see, on 1st April, out of 30 lakh, only 15 lakh has been used. So on 1st April, 15 lakh was the funds which was temporarily invested for a period of 6 months. And after 6 months, that fund was also used for the purpose of construction. It means there was a temporary investment income for 6 months at the rate of 7%. For 6 months at the rate of 7%. Correct? Is that clear? For the 6 months. Okay, for the 6 months. So friends, first of all, let's compute the borrowing cost. So on the factory building, 5 lakh multiply by 9% multiply by 12 months means 1 year. So 5 lakh multiply by 9% multiply by 12 divide by 12, 1 year. On 1st October 2001, 5 lakh multiply by 9% multiply by 6 by 12. This is the total cost minus 5 lakh multiply by 7% multiply by 6 by 12. So friends, borrowing cost, factory building and office building. So my borrowing cost is 10 lakh rupees. 10 lakh rupees is my borrowing cost. 9% is the rate of interest. Okay. So 10 lakh multiplied by 9%, 90,000. Minus investment income. What is my investment income? What is my investment income? 5 lakh multiply by 7% multiply by 6 by 12. So friends, what is the total cost which I have incurred on this borrowing? The total cost on the factory building is 10 lakh multiply by 9%. So per annum cost is 90,000. Since it is a specific borrowing, so whatever cost we have incurred, the entire cost we will charge, we will recognize as a part of the cost of the asset. So the entire cost is 90,000 for factory building and 20 lakh minus 9%, 1,80,000 for the office building. But I'm also getting some temporary income out of the surplus funds. So 5 lakh multiply by 7% into 6 by 12, 10 lakh multiply by 7% into 6 by 12. Okay. This is 72,500 and 1,45,000. So this will become part of the cost of the asset, borrowing cost. So what is my cost of the asset? Expenditure incurred 10 lakh and 20 lakh, the cost of the construction, and borrowing cost is 72,500 and 1,45,000. So 10 lakh 72,500 is the cost of factory building. Cost of office building is 21 lakh 45,000. Is there anyone who has not understood this question? Is there anyone who has not understood this question?
क्वेश्चन में स्पेसिफाइड तो नहीं किया है ना फैक्ट्री बिल्डिंग के लिए कितना अमाउंट और ऑफिस बिल्डिंग के लिए कितना है, कितना लोन लिया गया, ये स्पेसिफाइड तो नहीं किया गया, फिर हम कैसे कैलकुलेट कर लेंगे?
See, what is the total borrowing?
30 लाख.
30 lakh. In this question, what are the amounts which are given?
30 लाख.
30 lakh. What is the amount for factory building?
10 लाख.
What is the amount for office building?
20 लाख.
10 plus 20 lakh is equal to
30 लाख.
30 lakh. And it is written in the question that this company has borrowed 30 lakh to finance the construction of 2 qualifying assets. इन 2 qualifying asset के लिए लोन लिया है और लिखा भी है कि लोन फैसिलिटी वाज अवेल्ड ऑन 1 अप्रैल. ओके. एंड लिखा भी है कि ऐसे ऐसे पैसा उसने रिलीज किया है. 1 अप्रैल को 5 लाख यूज किया, फिर ऑफिस बिल्डिंग के लिए 10 लाख यूज किया, 1 अक्टूबर को 5 लाख यूज किया, फिर 10 लाख रुपीज यूज किया. लिखा भी है. करेक्ट?
जी जी.
Now your question could be, which I was expecting, that sir, since the money which was used, okay, the money which was used, for example, in case of factory building, the money used was 5 lakh for full year, but the another 5 lakh was only for the half year, right, in the construction. Then why in the question, why in the solution, the 9% has been calculated on entire 10 lakh rupees?
Because it has borrowed on first day.
Yes.
So we have to pay.
Yes, because the loan was taken on the first day. The loan was availed on the 1st April, day 1, and the company has to pay the interest for the full year. Correct? And since this amount was borrowed specifically for the purpose of qualifying asset, and hence whatever is the total cost of the borrowing, it has to be capitalized as a cost of the asset. But if the company is generating some investment income, the company is generating some temporary income out of the borrowed funds, that temporary income has to be reduced from the borrowing cost for the purpose of capitalization. Correct? So this was a case of specific borrowing. Now funds. Now let's talk about funds out of general borrowing. Okay. So what is meant by general borrowing? So let me tell you how the company works. Generally, every big company has a treasury department, right? And probably if you guys have done the audit of listed companies, you must have seen, or big companies, you must have seen there is a treasury department, okay, which is responsible for the borrowings, responsible for the loans, responsible for the working capital, okay? So there is a treasury department. Now, for example, so let me talk about the measurement of borrowings out of general pools. Okay. So let me take you to the Excel file and let's talk about the specific borrowing and general borrowing. Okay. A specific borrowing we talked about. Let's talk about the general borrowing. General borrowing means borrowing out of the general pool. Okay. For example, there is a company called A Limited. A Limited. Okay. A Limited has borrowed the following funds. Okay. So there is a treasury department of A Limited, which is sourcing the funds from the different sources. This A Limited treasury department has issued 4% debentures. 4% debentures. This company has issued debentures, and this company has procured loan funds in crores. This company has issued 4% debenture for 100 crores. This company has taken a 6% loan from SBI, means rate of interest is 6%. The amount is 50 crores. This company has taken 8% loan from Allahabad Bank. The amount this company has taken is 80 crores. And this company has also raised 2% commercial papers. Okay. 30 crores. 30 crores. So friends, this company A Limited, the company has procured funds from various sources, as on 1st April 2023 and form a pool of funds which will be utilized for the purpose of construction of fixed assets and working capital needs of the company. So this is a general purpose. If any construction will happen in future, the company will use the funds. If any, working capital requirement will be there, the company will use this fund, right? So out of this fund, the company has spent 25 crores on construction of the factory. The construction completed on 31st March. Let's say it is 31st January. Compute the borrowing costs. Friends, tell me, what is the total fund this company has procured? This company has procured the total funds of 260 crores, right? And this company has procured these funds from 4 different sources on 1st April 2023, right? The entire money was credited in the bank account of the company. The entire 260 crore is the bank balance of this company. So can you tell me, out of this 260 crore, this 25 crore which is utilized in the construction belongs to which borrowing? Can you tell me? Belongs to which borrowing?
It's a common, so weighted average should be taken in ratio of overall total interest.
So Abrikes, you reach to the outcome, right? So weighted average we'll discuss, but yes, you have rightly mentioned it's a common funds. You cannot say that, sir, this 20 money has no color. This 260 crore becomes a pool of funds, right? So when you are putting your hand and taking 25 crore out, You cannot say that this 25 belongs to debenture or SBI or Allahabad Bank or commercial paper. You cannot say that, right? So this is not a case of a specific borrowing. This is a case of general pool, borrowing out of general pool. So friends, in this case, standard says that whenever the company is utilizing the money for the construction, acquisition or production of a qualifying asset out of the borrowing from a general pool, in that case, the company has to apply a weighted average rate for the purpose of calculation of borrowing cost. Which borrowing cost? The borrowing cost to be capitalized, weighted average cost. So your first step is the weighted average cost. Compute the weighted average rate of interest. Step number one. Step number one. Calculate the weighted average rate of interest. How will you compute the weighted average rate of interest? Is equal to total interest cost divided by total loan. Total borrowings. What is the interest cost in this case? What is the interest cost? 100 crore multiplied by 4%. 50 crore multiplied by 6%. 80 crore multiplied by 8%. 30 crore multiplied by 2%. So my total interest cost is 14 crore. What is my weighted average interest rate? What is my weighted average rate of interest? Weighted average rate. What is my weighted average cost of interest? Weighted average interest is 14 divided by 260. 14 divided by 260. 5.38%. 5.38% is my weighted average rate of interest. Okay. So friends, step number one, calculate the weighted average rate of interest. Step number two, what is my step number two? Apply weighted average rate of interest to the amount spent on qualifying asset. Apply. Step two. Apply the weighted average rate of interest to the amount spent on qualifying asset. So in this case, what is my step number one? In this case, what is my step number one? Answer. Tell me my step number one, weighted average rate of interest. What is my weighted average rate of interest? What is my weighted average rate of interest? 5.38%. Step number two, apply. So 5.38%. How much money I have spent? 25 crores. Multiply by 5.38%. Multiply by the period of use. So 1st April to 31st January. How many period? How many months? Into 10 divided by 12. 1.1218 crore. This amount is going to be capitalized. Right? Correct? Sir, the total interest cost was 14 crore. And you have capitalized 1.12 crore only. So where the balance interest cost will go? P&L, as simple as that. It will go to P&L. So this standard was not talking about P&L. This standard was talking about what amount should be capitalized. Sir, while all the borrowings are still there, then why you have computed only for 10 months? Because this is a general pool. Once the construction gets over, it is no more a qualifying asset. It become a normal asset. It become an asset, complete asset, right? So borrowing costs are required to be capitalized only till the time the asset becomes ready for intended use or sale. Correct? Is that clear? So this asset took 10 months time for getting ready, and hence this money was utilized for 10 months to ready this asset, right? And hence the whatever is the money which was utilized, multiply by rate of interest, which is weighted average rate, multiply by the period for which this money has been used, okay, for the purpose of construction. So that amount has been capitalized. I hope it is clear to all of you, my dear friends. Any question, any problem so far? Any problem? Okay, let's solve one of the question from ICAI study material again. So when funds are part of a general pool, apply a capitalization rate to the expenditure on that asset. And what is the capitalization rate? Weighted average of the borrowing cost applicable to the general pool. Let's solve illustration number 9. Beta Limited had the following loans in place at the end of 31st March 2002. Following loans in place. 18% bank loan. The opening balance was 1000. The closing balance was 1000. This is not a bank balance. ये loan का balance है, liability है ये. So opening में भी liability 1000 की थी, मतलब 10 lakh की थी, और closing में भी 1000 की liability है. Means the loan was still outstanding. The loan was taken on 1st April or prior to that, and it is still outstanding. 18%, 16% term loan, 3000, 3000. 14% debentures. In opening the debenture was not there, but in closing the debentures are there. Okay, in closing the debentures are there. 14% debenture were issued to fund the construction of office building on 1st July 2001, but the development activities has yet to be started. For debenture, the use of the debenture is given. 14% debenture were issued to fund the construction of the office building on 1st July 2001, but the development activities are yet to be started. On 1st April 2001, the company began the construction of a plant being a qualifying asset using the existing borrowings. Friends, in this question, 3 kind of borrowings are there: 18% loan, 16% loan, and 14% debentures. Have you found any loan which is there for a specific purpose?
Debentures.
Debentures.
14%.
14% debentures are for the specific purpose. Means 14% debenture is a specific borrowing. It is not a general borrowing. It is a specific borrowing. These debentures have been taken for the purpose of construction of office building. This is a specific borrowing. It means the remaining borrowing, 18% and 16%, 1000 plus 3000, 40 lakhs are a general pool. 40 lakhs are general pool, which is utilized for the purpose of construction of a plant, construction of factory, right? So in this question, the first trick was to remove, to eliminate, to segregate the general pool and the specific borrowing, right? Then we understood that part. Then we understood that this general pool was outstanding since day one, and it is written in the question. On 1st April, the company started the construction of a factory using the existing borrowings, and expenditure drawn down for the construction was 5 lakh on the day one and 25 lakh on 1st January 2002, which is given in the question. Calculate the borrowing cost that can be capitalized for the plant. Friends, the first 2 borrowing, existing borrowing, was not for the specific purpose. It was for the general purpose. So first we need to compute the weighted average. We need to compute the weighted average. Let me take you to the Excel file. Illustration number 9. Illustration 9. What is my step number 1? So my step number 1 is to compute the weighted average rate. Okay. So what is my borrowing? What is my borrowing? My borrowing is 14%, 18% bank loan, 16% term loan. 18% bank loan and 16% term loan. This is the given in the question. What is the amount? What is the loan funds? Loan funds. Interest cost. What is my loan funds? From 18% bank loan, this company has taken 1,000, 3,000 from loan fund, from its 16% term loan. What is my interest cost? 1,000 multiplied by 18%. 3,000 multiplied by 16%. What is the total loan? 4,000. What is the total interest? 660. What is the weighted average? What is my weighted average rate of interest? What is my weighted average rate of interest? Weighted average interest rate. My weighted average rate of interest is how much? 16.5%. 16.5%. Okay. This is my weighted average rate of interest, 16.5%. Is that clear? Apply step number 2. Apply the weighted average rate of interest to the amount spent on qualifying asset. So I have two amounts which I have spent on the qualifying asset. 500,000 on 1st April 2001. 1st April 2001. How much amount I have spent? 500,000. All the figures are in thousands. Then on 1st January 2002, 25 lakh. 1st January 2002. 2,500,000. Okay. The total money which I have spent is 3,000, right? 3,000. So tell me, for how much period? What is my weighted average rate of interest? My weighted average interest rate I need to apply is 16.5% for this thing. What is my amount of borrowing cost? 500 multiplied by 16.5% multiply by for full year 12 by 12. This is utilized for 12 months, right? 12 months. Is that clear? This is utilized for 12 months. मतलब पूरे साल के लिए. This amount will be utilized for, this money was spent on 1st January 2002, means 3 months. So how much borrowing cost is going to be capitalized? 185.625 thousand means 1,85,625. Okay. I hope this is clear to all of you, my dear friends. Yes, is that clear? Clear or clear? Is that clear? This illustration is clear? Clear in mind? Okay. So whenever there is a general pool borrowing, first you need to compute the rate. You have to apply the rate for the period the money has been utilized for the purpose of construction. Okay. Right. So we understood the measurement of borrowing in case of specific borrowing and in case of borrowing out of general pool. Right. Now the question will come, sir, from which date the borrowing cost is going to start to be capitalized? For example, the company has taken a loan from State Bank of India. The company has taken a loan from State Bank of India. Okay. Let's say the amount is 50 crore rupees for the purpose of construction, but the company has not started the construction. Even the company has not purchased the land for construction purposes, right? The company has not done anything. The only thing is the company has taken a loan. Friends, in this case, whether the interest will start, interest तो start हो गई. अगर बैंक ने लोन दे दिया तो इंटरेस्ट तो स्टार्ट होगा, borrowing cost will start. But whether that borrowing cost will be capitalized, there was no expenditure on any asset, no construction activity was started, nothing. Only borrowing has been taken. The money is lying idle in the bank account. My question is whether the interest cost will also getting capitalized from the day one. किस पे करोगे? आपका basic asset जो है, your basic asset is not getting constructed. You don't have any asset. Okay. You are not incurring any expenditure. The money which you have taken, you are not utilizing the money. Are you getting me? You are not utilizing the money for the purpose of construction. Okay. So how will you capitalize that interest cost? So standard says that you are required to start capitalizing the borrowing cost only from the commencement date, right? Start capitalizing borrowing cost on the qualifying asset on the commencement date. What is a commencement date? What is a commencement date? Commencement date is the date. Commencement date is the date when the entity meets the following condition. Commencement date वो डेट है जब एंटिटी तीन कंडीशंस को मीट करती है, तीन कंडीशंस को मीट करती है, राइट? कंडीशन नंबर 1, expenditure for the asset is incurred, borrowing cost is incurred, activities that are necessary to prepare the asset for its intended use or sale is started. So let me explain with the help of an example. For example, who is there? Karthik. For example, Karthik is there. So Karthik wants to construct his house. Okay. For that purpose, Karthik has taken a home loan on 1st April 2023 for rupees 1 crore. The rate of interest is 10%. On 1st April 2023, the Karthik has taken a loan. So bank has sanctioned, bank has released the money, and the fund was credited in Karthik's bank account. Karthik, whether borrowing has been done in this case, whether borrowing has been done, whether borrowing cost is started. Yes, borrowing has been done. Borrowing cost has been started. He has to pay interest from the day one, right? So fund were lying idle in Karthik's account. So now Karthik wants to get the construction done. And for that, he was searching a land. Land नहीं होगी तो construction कहां से होगी? घर किस पे बनेगा? So on 1st of June, Karthik has purchased a land. On 1st of June, Karthik has purchased a land, right? So on 1st April, he has taken a home loan for 1 crore rupees. 10% is the interest rate. On 1st of June, after 2 months, he has purchased the land, right? And on 1st of July, he started the construction activity. He started, getting the map sanctioned, architectural design, approval for map. So he started, he has started all those activity on 1st of July. My question is, what is commencement date? So I'll ask 3 questions. Number 1, what is the date of borrowing in this case? What is the date of borrowing? 1st April. Very good. 1st April 2023. Your borrowing cost is incurred on 1st April 2023. What is the date when the expenditure for the asset is incurred? When Karthik has purchased the land, what is the date? When Karthik has purchased the land? Yes, 1st June 2023. Okay, 1st June 2023. So 1st April borrowing has been done. 1st June the land has been purchased. Activities that are necessary to prepare the asset for intended use or sale. The intention of Karthik is not to sell the land. The intention of Karthik is to do the construction. And for doing the construction, he has to get the map approved from the authority. He has to get the architectural design. He has to start the construction activity, right? So he has started all those activities on 1st of July. So friends, what is the date when all these three conditions are meeting? What is the date on when on all these three conditions are meeting? Yes, July 1st. You are right, Nisha. July 1st. 1st July is the date when all these three conditions are meeting. All these three conditions, right? So what is the commencement date of capitalization? From which date the borrowing cost will get started to capitalize? From which date the borrowing cost will be capitalized? 1st July. Very good. But he has taken the loan on 1st April. So what will happen from 1st April to 30th June? He has to pay interest for 3 months as well. So where that 3 months interest will go? It will go to P&L. Very good. It will go to P&L. So friends, have you understood? So that is why, due to this commencement date concept, if the company has taken a loan out of the general pool, the money is lying idle in the bank account, right? So this amount of interest cost, borrowing cost, will not going to be capitalized till the time the money has been actually spent for the purpose of construction of a qualifying asset. I hope this is clear to everyone. So friends, expenditure on a qualifying asset includes those expenditure that have resulted in payment of cash, right? Because you have taken a loan and you have not paid any money to anyone. So in that case, your loan has not been utilized for the purchase of asset. So expenditure means when you have incurred some expenditure, it has resulted in flow of funds, okay, or transfer of other assets or assumption of interest bearing liabilities, right? What is activities necessary to prepare the asset for intended use or sale? So activities necessary to prepare the asset for intended use or sale does not mean only construction activity. Even the technical or administrative activities have been started. It is also considered as activities which are necessary for the construction of for the purpose of construction of the qualifying asset, right? Is that clear? Yes, Abrikes has a question and Monica has a question. So Monica, first you can ask your question, then Abrikes you can ask question. Monica,
Sir?
first is your turn. Yes.
सर प्रोसेसिंग फीस जो हमने बैंक अकाउंट का लोन बैंक से लोन लिया था तब हमने कंसिडर करी थी बोरोइंग कॉस्ट में, राइट? अभी जो आपने एग्जांपल दिया उसमें प्री एक्विजिशन कॉस्ट जो दी है आपने कि लैंड को परचेज करने से पहले वाली कॉस्ट को डायरेक्टली गो टू P&L, बट जो प्रोसेसिंग फीस थी वो हमने ऐड करके पार्ट ऑफ बोरोइंग कॉस्ट बनाया, सो कैपिटलाइज किया, एक रेट निकाल के कैपिटलाइज किया, उसमें बाइफर्केशन नहीं किया। तो वो क्यों किया और ये क्यों किया? डिफरेंस मतलब इसको भी तो वही ट्रीटमेंट चाहिए था।
Monica, first, yes, I understood your question. So Monica, first of all, you need to understand what is borrowing cost. So there are three kind of borrowing cost. Number one, interest cost and other cost of the borrowing, right? Using the effective interest rate.
Yes,
So
sir.
technically speaking, for example, a company has taken a loan, okay, for rupees 10 lakh. And this loan period is 2 years, for example, okay? Or let's
Yes,
take an
sir.
example of 1 year itself. जो मैंने लिया था ना example, 95 crore, 110 crore, 15.79% is the rate of interest, correct? And that
Right.
15.79 was not the rate of interest, it was effective rate of interest, EIR.
Right.
So let's say this EIR has been calculated, 15.79%. The total
Yes, sir.
interest, total borrowing cost for the period is 15 crore. Now we are discussing Now we are discussing when this borrowing cost will started to get capitalized. What is the commencement date of capitalization of borrowing cost? For example, the company was taken a loan of this net loan of 95 crore in my previous example on 1st April 2023, right?
Right.
The company had also purchased a land on that date. Company ने land भी purchase कर ली.
Right.
Okay.
Hmm.
But the company has started the activities which are necessary to prepare the asset for its intended use or sale. Land तो land है, company को construction है, the intended use is construction. So for construction, the company needs the map, the company needs the architectural design, the company needs to enter into construction activity, the company needs to purchase bricks, right? The company needs to purchase sand, the company needs to take some machineries for the purpose of construction, the company needs to hire laborers, correct? So company needs to do all those activities. So the company has done that activity on 1st of July. Okay. So
Okay.
1st April, loan has been taken. 1st April, land has been purchased, but the activity was started on 1st of July. Now the question is, sir, when the borrowing cost will start to get capitalized? Answer is 1st of July is the commencement date. Sir, what is the value of the borrowing cost? So 95 crore is your net inflow, multiply by 15.79%, multiply by 3 by 12. The first 3 months borrowing at the effective interest rate will go to P&L, and the remaining borrowing cost will be capitalized. Are you getting me? जो मैंने प्रोसेसिंग फी पे किया था इस कमेंसमेंट डेट से पहले की, वो भी स्पिल ओवर हो गई. क्यों हो गई? क्योंकि आपने इफेक्टिव इंटरेस्ट रेट यूज किया है. तो फर्स्ट 3 मंथ्स का P&L में चला गया, बाद का आपका कैपिटलाइज हो जाएगा. तो पहले हमने सीखा व्हाट वी हैव लर्नड अर्लियर, व्हाट आर द बोरोइंग कॉस्ट, और उन बोरोइंग कॉस्ट को हम किस मेथड पे लेते हैं? इफेक्टिव इंटरेस्ट रेट पे लेते हैं. देन हमने सीखा 2 तरह की बोरोइंग होती है, स्पेसिफिक बोरोइंग, बोरोइंग आउट ऑफ जनरल पूल. फिर हमने सीखा कि हम बोरोइंग कॉस्ट को कब से कैपिटलाइज करना स्टार्ट करेंगे. देन वी हैव लर्नड दैट व्हेन 3 कंडीशंस विल मेट. तो उससे पहले का क्या होगा? उससे पहले का P&L में जाएगा, राइट? सर कैलकुलेशन कैसे होगी? कैलकुलेशन तो हमेशा इफेक्टिव इंटरेस्ट रेट के बेसिस पे होगी, चाहे बोरोइंग कॉस्ट आपको P&L में लेके जानी हो, चाहे आपको बोरोइंग कॉस्ट कैपिटलाइज करनी हो. Ind AS 109 says that borrowing cost, I mean to say interest cost, I mean to say finance cost, has to be calculated, computed on the EIR basis. अब उस EIR basis पे आपको जितने पीरियड का आपको P&L में लेके जाना, आप P&L में लेके चले जाओगे, जितना कैपिटलाइज करना आप कैपिटलाइज कर दोगे.
Okay, sir. I got it.
Is it clear, Monica?
Clear, sir. Clear, sir.
Very much clear? Or only
Right.
for the sake of saying clear, you are saying clear?
No, sir. Very much clear.
Thank you. Yes,
Thank you,
Abhiraj.
sir.
Good morning,
Yes,
sir.
Abhiraj.
Sir, my question is buying of land, is it not an activity necessary to prepare for the asset? Because without land, there can't be a building.
So, Abrikesh, the land will have a alternative use also. Okay. For example, today you have taken a loan. You have also purchased a land. Okay. 4 months, after 4 months, since you have not started any activities, आपने कोई उस पे ब्रिक्स डालना शुरू नहीं किया, आपने कोई क्रेन या कोई मशीनरीज आपने उस साइट पे ले जाना शुरू नहीं किया, आपने किसी लेबर को एंगेज नहीं किया, आपने अथॉरिटी में मैप के लिए अप्लाई नहीं किया, करेक्ट? आपने उसके कंस्ट्रक्शन के लिए कोई डिजाइन बनाना शुरू नहीं किया. सो अगर ये थर्ड कंडीशन नहीं होती, इफ दिस थर्ड कंडीशन वुड नॉट हैव बीन देयर, देन प्रोबेबली व्हाटएवर यू आर सेइंग दैट इज राइट. मैं फर्स्ट डे पे ही कैपिटलाइजेशन शुरू कर देता. After 4 months, since I have not started any activity, after 4 months, I have decided to sell this land as it is. Abrikesh, what will happen then? This land was not a qualifying asset, na? Correct? Are you getting me?
Yes.
So that is why standard says that, you, since you have purchased a land, it has an alternative usage. Okay. So till the time you will actually not put your efforts, right, to make it necessary, to make it ready for the intended use or sale, Till that point of time, you cannot start capitalizing your borrowing cost. Is that clear?
Yes, sir. Okay, got it. Got it.
Karthik has some question. Yes, Karthik.
Sir, I was having the same issue as application that why it cannot be capitalized from the date when the land was purchased.
I
But
hope
sir,
you have got the answer.
it may depend, right? The intention, that वो जो इंटेंशन है वो तो लैंड जब हमने परचेज किया, हमने लोन लिया, तभी से हो सकता है कि हमने बिल्डिंग बनाने के लिए लैंड खरीदी है. तो इंटेंशन जो है वो फ्रॉम द वेरी फर्स्ट डे व्हेन द लोन वाज टेकन वाज स्पेसिफाइड, सो इट कैन बी कैपिटलाइज्ड फ्रॉम द परचेज ऑफ लैंड ओनली. क्योंकि अगर
But how
ऐसा है
this,
कि
how
इंटेंशन तो
this,
कभी
how
भी चेंज
this,
हो सकता है सर.
how this intention will be visible? How this
Uh,
intention will be substantiated? This is a kind of a judgment, right?
यस सर.
मैंने बोला कि मुझे ऑडिट पढ़ाना आता है, right? So I have told that my intention is to teach audit also, and I know how to teach audit. Okay, but till the time I'll not teach audit, how will you be able to know that I am able to teach audit or not? This is my, let's say, first lecture on audit. So the point is, Karthik, this intention can be manipulated. These are thinkings which are recorded on the piece of paper, right? How will you substantiate that? If you have spent a huge amount of money and your intention is to construction, right? Your intention is to produce the qualifying asset, is to produce the asset, right? आपने लैंड लेके छोड़ दी, आपकी इंटेंशन कंस्ट्रक्शन करने की है, फैक्ट्री बनाने की इंटेंशन है, आपकी इंटेंशन फ्लैट बनाकर बेचने की है. So don't you think you will be in a hurry to do that? Don't you think? If you are not in a hurry, you have just purchased for the sake of purchasing, that yes, okay, whenever the right time will come, I will start construction. It means there is no definition of a right time when it will come. Probably your intention will change, your situations will change, and you had to sell off this land. So what you will do, whatever you have capitalized, you have to reverse that interest expense. So in 1 year, your P&L was great. In the second year, there was a huge hit in your P&L for the past period expenses. So that is why standard says that, friends, when you have done the borrowing, when you have done the expenditure, and when you have started the activities for making it ready for the intended use or sale, and that is why standard has not told you कि आपको कंस्ट्रक्शन स्टार्ट करनी है. आपने लैंड खरीद कर अगर मैप के लिए अप्लाई कर दिया, आर यू गेटिंग मी, कि नक्शा तो बनाना पड़ेगा ना, अथॉरिटी से अप्रूवल तो लेना पड़ेगा ना कंस्ट्रक्शन के लिए. इफ यू हैव इवन अप्लाई फॉर द अप्रूवल ऑफ द मैप, even those technical and administrative activities are considered as an activity necessary to prepare the asset for intended use or sale, right? So to answering the question of Abrikes and Karthik, to your question, even if the map has been applied for, if the approval has been taken for the map, even that will also tantamount as an activity. Not necessarily actual construction is required. Okay, the act is required.
Okay, sir. Got it.
Understood?
Yes.
Illustration number 10 from ICAI study material. Give me the answer quickly. X Limited is commencing a new construction project. It is commencing a new construction project. Okay. Which is to be financed by borrowing. The key dates are as follows. 15th May. Loan interest relating to the project started to be incurred. 15th May. Means the loan has been taken. 2nd June. Technical site planning commenced. Technical site planning. Okay. 19th June. Expenditure on the project started incurring. 15 मई को लोन लिया. 2nd June को साइट की प्लानिंग भी हो गई. टेक्निकल प्लानिंग मींस आर्किटेक्चरल डिजाइन एंड एवरीथिंग. एंड 19 जून को एक्सपेंडिचर भी स्टार्ट हो गया. ओके. 18 जुलाई को कंस्ट्रक्शन वर्क भी स्टार्ट हो गया. Identify the commencement date for capitalization of borrowing cost. 19 June or 18 July. When these three conditions will meet, loan has been taken, means borrowing started. 15th May. Activities necessary to prepare the asset for intended use or sale started. Technical site planning. Expenditure on the asset has been incurred. 19 June. 18 जुलाई भी है बट उससे पहले 19 जून है. So what is the commencement date? Commencement date is 19 June. Nisha, it is not 18 July, it is 19 June, right? As I told you, the activities necessary to start the, to start the qualifying asset is not always, not necessarily a construction activity. Even some technical and administrative activities required before that, it is also considered as a activities necessary to prepare the asset. Okay. Any problem, any doubt? Any doubt in this question? Very good. So in this question, what is your commencement date? Your commencement date is the date when the above three conditions would be satisfied in all, that is 19 June 2001. Okay. Yes. Friends, we discussed commencement of capitalization, right? Commencement of capitalization. So now, let's say the company has taken a loan for the construction of bridge. The company is a construction company. So the company got an order from the government that you have to construct a bridge, or you have to construct a road, or you have to construct a factory, let's say, or you have to construct a hospital building. So the company started construction of a hospital building, let's say. And this hospital building will take 3 years for getting it completed for the use. Use means when the doctors will be able to do the surgeries, operations, to consult the patients. So it will take 3 years. The company has taken the loan on the day one. The land has been acquired. The construction activity has been started on the day one itself. When the company has taken a loan, day one means जब कंपनी ने लोन लिया, हाथ के हाथ कंपनी ने खर्चा करना भी स्टार्ट कर दिया, बल्कि खर्चा तो पहले से करना स्टार्ट कर दिया था, लोन बाद में लिया. तो जिस दिन भी लोन लिया, commencement date was started. Friends, the period of construction is 3 years. Of course, it is a qualifying asset. Yes, it is a qualifying asset. In those 3-year period, the labor went on a strike for 3 months in between, due to which this construction got delayed. And in between, a COVID came, and due to COVID, there was again 3 months delayed. Means 3 months delay is on account of COVID, and 3 months delay is on account of labor strike, which is abnormal in nature, right? And in those 6 months, no construction activity was there. No development was there in those 6 months. Okay. So now the question is, the interest on loan was started, right? So the interest was payable in those 6 months also. The question is whether the period where the strike was there, COVID was there, whether the interest cost for that particular period is going to be capitalized or is required to charge to the P&L. Friends, standard says that, and the same concept was there in accounting standard 16 also. Capitalization of borrowing cost shall be suspended, postponed during the extended period in which it suspend active development of a qualifying asset. Okay. In which it suspends active development of a qualifying asset. Active development of a qualifying asset, right? So friends, for example, this factory was started constructing. So this is the factory. Okay. 1st April 2020. Expected to be completed by 31st March 2023. Expected. The actual construction completed on 30th September 2023. Okay, why? The 3 months period in Jan, Feb, March 2021. This 3 months period. No development due to labor strike. October, November, December 2022. No development due to COVID. I'm just taking a hypothetical example. COVID. So standard says that in the period in which the active development of the asset is interrupted, so the borrowing cost capitalization will be suspended in the period in which the active development of the asset is interrupted, right? So for that period, the borrowing cost shall be suspended and charged to the P&L. So this 3 months borrowing cost is not going to be capitalized, it will be charged to the P&L. Okay. Friends, due to this abnormal loss, this period has been extended and this borrowing cost will be capitalized till 30th of September, right? For 3.5 years minus 6 months, which is for 3 years. Sir, why the standard has given such kind of, in accounting standard or IFRS or Ind AS? Friends, first of all, you are just wasting the time. Not due to your reasons, but probably due to some abnormal reasons. It is like abnormal loss. So due to this abnormal period, whether any efficiency or value of this asset is increasing, whether it is adding any value to this asset, have you spent 3.5 years just for the sake of some efficient construction? क्या आपने 6 महीने एक्स्ट्रा लगाए? क्या 6 महीने आपने एक्स्ट्रा इसलिए लगाए क्योंकि आपने उस एसेट को और अच्छे से कंस्ट्रक्ट किया? आंसर इज नो. Out of this 3.5 months, there was no value addition. For this 6 months, there was no value addition. For this 6 months, okay, no value addition. And it is like an abnormal loss. And even your PPE standard says that if there is an abnormal loss, this abnormal loss has to be charged to the P&L. So friend, standard says that if in your extended period, if the active development was interrupted, the active development was not there, so for that period, the borrowing cost is required to be suspended and charged to P&L. और ये लिखना जरूरी क्यों था? The companies will started manipulating. The company know that I have taken a loan for the purpose of construction. And whenever my construction will get completed, my borrowing cost will started getting into the P&L. क्योंकि जब तक कंस्ट्रक्शन कंप्लीट होगी तब तक बोरिंग कॉस्ट कैपिटलाइज होगा, उसके बाद P&L में आ जाएगा. एंड कंपनी नोज दैट आई एम नॉट इन अ पोजीशन टू रीपे द लोन इन द नेक्स्ट 5 years. And company knows that this interest cost is a huge cost, right? And company is planning to take some other loans, or the company is planning to go for IPO, let's say. So the company has to present the healthy P&L, healthy profitability. So in that case, what company will do? Company will start manipulating, and companies will stop the production or construction in between, right? Just to linger on the period for which the company is either planning to take additional loan or go for IPO. Friend, that is why standard has told you that whenever in the extended period, the active development is interrupted, for that period, you are not required to capitalize the borrowing cost. Means the period which you have not expected, not budgeted, it is not going to be capitalized as a borrowing cost. Is that clear? Sir, but let's say in few cases, for example, the company is constructing a bridge in Meghalaya, right? And company knows that there is always a heavy rainfall in Meghalaya. So company knows that if I have to construct this bridge in Meghalaya, normally it will take 3 years if I have to construct this bridge in Delhi. But if I have to construct in Meghalaya, it will take around 5 years. This 2 year, why this 2 year delay is there? This 2 year delay is a normal delay because the company is not able to run the construction for 12 months. Every year, the company will be able to run the construction for only 7-8 months. So friends, standard says that an entity also does not suspend capitalized borrowing cost when a temporary delay is a necessary part of the process for getting an asset ready for its intended use or sale. For example, capitalization continues during the extended period that high water level delays construction of a bridge if such high water levels are common during the construction period in the geographical region involved. Correct? इसमें तो कंपनी बजट भी कर सकती है ना. When the company started construction, the company has budgeted that yes, it will take 5 years because in the geographical region which I am doing the construction will not get over in 3 years. It will take around 5 years. Are you getting me? Is that clear? Is that clear? So we discussed commencement of capitalization. We discussed suspension of capitalization. Sir, when to stop the capitalization? Tell me when to stop the capitalization. When to stop the capitalization of borrowing cost? Simple है. जब आपका asset बन के तैयार हो जाए. When your asset will get ready for intended use. Correct? So standard says that your borrowing cost will be stopped. Stopped कहां से? For the purpose of capitalization. Borrowing cost तो चलती रहेगी जब तक आप लोन रीपे नहीं करोगे. The borrowing cost will continue till the time you will repay the loan. But here we are talking about stopping the borrowing cost. Stopping the borrowing cost for the purpose of capitalization. So borrowing cost will be ceased when substantially all the activity necessary to prepare the qualifying asset for its intended use or sale are complete. Right? What is meant by substantially completed? Have you seen the school building? Have you seen the school building? You must have seen there was a newly constructed school or college building, right? The whitewash on the exterior walls are going on and the classes started scheduling on that school. The students started studying in the school while the whitewash on the exterior wall was going on. Yes, you must have seen that. कि स्कूल में बच्चों ने पढ़ना शुरू कर दिया, टीचर ने पढ़ाना शुरू कर दिया जबकि व्हाइट वॉश चल रहा है बाहर की वॉल पे. Yes, you must have seen that the builder has sold the flat and the interior work will done when the customer will go to the flat. The customer will take the flat. कई बार होता है ना कि builder will construct the flats and the builder will construct the almirahs. Builder will give the wooden flooring at the request of the customer. So if the customer will say that I need this wooden flooring in bedroom, he will give in the bedroom. If in the kids room, he will give in the kids room, right? So friends, it means that asset is largely ready for use, right? The only thing is that touch-up is required or some marketing due to some marketing strategies. These things have not been completed. Okay. So friends, borrowing costs are going to be stopped for capitalization when substantially all the activity necessary to prepare the qualifying asset for its intended use or sale are complete. Right. So when an entity complete the construction of a qualifying asset in parts and each part is capable of being used while construction continues on other parts, the entity shall cease capitalized borrowing cost when it completes substantially all the activities necessary to prepare that part for its intended use or sale. Sir, what does it mean? Let's say a company is constructing a commercial park. A company is constructing a commercial park, right? Commercial zone. In that commercial park, there are 4 buildings. Number 1, shopping mall. Number 2, office building. Number 3, theater. Number 4, residential building, right? So the company has taken a loan of 500 crore. And let me explain with the help of an example. Cessation of borrowing cost. Okay. The company has developed a commercial park which consists of office building, shopping mall, theater, and residential building. The company has taken a loan of rupees 500 crores, which is allocated in the equal ratio on all these four buildings, right? On this, all these four buildings, right? Calculate, suggest the capitalization of borrowing cost in below scenario. So office building, then your shopping mall, then theater, then your residential. 31st March 2023. Your residential building completed, and all these three buildings are in work in progress, right? And even though if these three buildings have not been completed, the residential building can be used, right? It is ready for intended use or sale. It is ready, right? So what is the borrowing cost treatment? What is the treatment of borrowing cost? Continue, stop the capitalization, right? 31st March 24. These two buildings have been completed. The theater is in WIP. So what is the treatment of borrowing cost? What is the treatment of borrowing cost? Stop the capitalization, and for this theater, the borrowing cost will be continued. So friends, if the qualifying asset is getting constructed in parts, so the borrowing cost in each part will be stopped when the part is ready for the use or sale, intended use or sale, when it is substantially ready. Okay. But let's say another example, the company is constructing a complex plant, which is factory, which includes 4 small plants, right? Each plant is dependent on each other, and the production cannot start until the 4th plant will get constructed. Right? The company has borrowed. The company has taken a loan of rupees 500 crore, which is equally allocated in the ratio of all these 4 plants. Tell me now, this first plant A, plant B, plant C, plant D, right? These are the plants. So each plant is dependent on each other, right? Each plant is dependent on each other. Okay. So now the question is, if the construction will get completed on each plant, for example, this plant A completed, in 31st March 2023. This plant B and C both are completed in 4. Plant D completed in 31st July 2024. Tell me when borrowing cost will be stopped. When borrowing cost will stop.
31st July 24.
Plant A, B, C, D. On all these plant, borrowing cost will be continued till 31st July 2024. I hope with the help of these two examples, you guys have clearly understood the cessation of capitalization also. Correct? Right? Okay. Let's discuss illustration number 11. Just on a concept that if a company has taken a loan from the group company, a subsidiary finances the construction of a qualifying asset with an intercompany loan. This subsidiary has taken a loan from the holding company, parent company, and this subsidiary is constructing a factory. Are borrowing costs incurred on the intercompany loan capitalized in the separate financial statement of the subsidiary? सब्सिडरी के सेपरेट फाइनेंशियल स्टेटमेंट में, सब्सिडरी के स्टैंडअलोन में क्या बोरोइंग कॉस्ट कैपिटलाइज करेंगे? पेरेंट के कंसोल पे तो वो एलिमिनेट हो जाएगा, राइट? बट सब्सिडरी के स्टैंडअलोन फाइनेंशियल स्टेटमेंट में क्या बोरोइंग कॉस्ट कैपिटलाइज करेंगे इफ दिस सब्सिडरी हैज टेकन अ लोन फ्रॉम द पेरेंट फॉर द पर्पस ऑफ कंस्ट्रक्शन ऑफ फैक्ट्री? यस, करेंगे. It is a borrowing. It is a borrowing, correct? Standard does not say that the borrowing has to be taken from the bank. Standard only says that the borrowing has to be there. Doesn't matter. It is bank, NBFC, holding, parent, intercompany, debenture, loan, commercial paper, doesn't matter. Equity नहीं होना चाहिए. If it is loan, it has to be capitalized. Friends, let's discuss another case study, and it is your question number 2 of test your knowledge, right? It is question number 2, correct? So just a minute. Yes, question number 2 from test your knowledge ICAI study material. So let's discuss this question also. X Limited has a treasury department that arranges funds for all the requirements of the company, including funds for working capital and expansion programs. During the year ended 31st March 2002, the company commenced the construction of a qualifying asset and incurred the following expenses. Correct? 1st July, 2.5 lakh. 1st December, 3 lakh. And it is talking about during the year ended 31st March 2002. The details of borrowing and interest thereon are as under. Long-term loan at the rate of 10%. Average balance is 10 lakh. Interest is 1 lakh. Working capital loan is 5 lakh. Average balance. Interest is given 65,000. 15 lakh rupee is the total average balance of the loan. 1,65,000 is the interest, right? And this is, there are two loans, right? Is it a specific borrowing or is it a case of general pool? It is written that for all the requirement of company, including funds for working capital and fixed asset expansion. Is it a case of specific borrowing or general pool? It is a case of general pool. You're right. It is a case of general pool. Okay. So what is the step? What is the step number 1 in case of a general pool? Total interest cost divided by the total pool of the funds. So 165 divided by 15 lakh. What is my rate of interest? 1,65,000 divided by 15 lakh. 11% is the rate of interest. So compute the weighted average rate of interest. Step number 2, apply the weighted average rate of interest on the money spent on the borrowing utilized for the purpose of construction. This 2,50,000 is utilized on 1st of July. So 1st July till 31st March, 9 months. 250 multiplied by 11% multiplied by 9 divided by 12. 3 lakh was utilized in 1st December. So 4 months. 3 lakh multiply by 11% into में 4 divided by 12. 11,000. So total interest capitalized for the year ended is 31,625. Right. So this was the question number 2 of ICAI study material from Test Your Knowledge. Disclosures. Whatever amount of borrowing cost capitalized during the period, it is required to be disclosed in the notes to accounts. And whatever is the capitalization rate used, be it a specific borrowing or general borrowing, whatever is the capitalization rate used, that is also required to be disclosed. Friends, comparison between AS and Ind AS. AS 16 between Ind AS 23. If I talk about the major differences, in AS 16, substantial period of time was defined. In Ind AS 23, it is not defined, right? It is not defined. In disclosure, the capitalization rate is not required to be disclosed in AS, but it is required to be disclosed in Ind AS. Okay. Let's recap. So friends, we have discussed that the general principle that borrowing cost is required to be recognized in the P&L, but the borrowing cost, which is directly related to the acquisition, construction, and production of a qualifying asset, is required to be capitalized as a part of the cost of the asset. Since it is a borrowing cost, so if there is any equity, the company has raised funds through equity. So those cost of equity is not a borrowing cost, and hence it is not going to be capitalized. So what is my borrowing cost? We discussed that borrowing cost are interest and other cost of borrowing, which includes interest and other cost plus what? Plus interest on lease liabilities. If the asset which is used in the construction of qualifying asset is on a lease basis, plus what? Exchange loss, exchange difference, to the extent it will be regarded as an adjustment to interest cost, right? Then we discussed qualifying asset. Qualifying asset is an asset which takes a substantial period of time for getting ready for intended use or sale, right? So if the inventory which is manufactured on a repetitive basis and in a large quantity, it is not a qualifying asset, right? But if there is a made to order inventory, the government is giving an order to a construction company to construct bridge. So it's not like that company is constructing bridge every day, right? At its own whims and fancies. Answer is no. The company is, whenever the company is getting an order, the company started constructing the bridge, right? So we discussed qualifying asset. If a specific borrowing is there, calculate actual cost of borrowing minus temporary income. But if it is out of general pool, you have to follow 2 steps. Number 1, weighted average rate calculation. Number 2, apply the weighted average rate for the period on which the amount has been used, right? So capitalize borrowing cost to the qualifying asset, and you have to start your capitalization from commencement date. Commencement date is a date when 3 conditions will meet. Number 1, borrowing has been done. Number 2, expenditure has been incurred. Number 3, activity has been started. Borrowing cost will be suspended if the active development of the asset is interrupted. It is like an abnormal loss. It has to be taken to the P&L. But if the delay was a necessary part of the process, which was predicted on the day 1, in that case, it will not be considered as a suspension of the capitalization. And in that period of time, the borrowing cost will still continue to capitalize. The borrowing cost capitalization will stop when the asset will substantially get completed. So friend, this is what we have discussed with layman language examples, with ICAI study material and my own examples and explanations, right? So thank you so much. If you have any question, would be happy to answer. Otherwise, I will be happy to conclude the session. Yes. Yes, Abrikes.
Sir, my question is regarding the exception to the scope, second one, that inventory part, in large scale and repetitive use. I mean, why this is required to be mentioned? Because any amount borrowed for that inventory, why, we consider it as a asset? I do not know why it is, how it is excluded.
So, Abrikes, first of all, the title of the standard is a borrowing cost, right? And
Yes.
if you will see the first definition, it says that borrowing cost directly related to the acquisition, construction, and production
Yes.
of a qualifying asset, right?
Yes.
It is required to
Yes.
be capitalized as a part of the cost of the asset. The standard never says that PP or intangible asset. It says that acquisition, construction and production of a qualifying asset, right? You are producing
Yes.
inventories. You are producing inventories also. So
Yes.
I am a businessman. Okay. I am a company. I am into the construction of aircrafts. Okay. So what is aircraft for me? What is the nature of aircraft for me? Inventory. इन्वेंट्री है ना एयरक्राफ्ट मेरे।
Yes.
मैं पूरे साल में
Yes,
5
yes.
एयरक्राफ्ट बनाता हूँ, 5। आई एम ओनली मैन्युफैक्चरिंग, आई एम ओनली प्रोड्यूसिंग 5 एयरक्राफ्ट, and these 5 aircraft took a substantial period of time for getting ready for intended use or sale. That is why the word is
Yes.
intended use or sale. For the purpose of selling aircraft, I am only manufacturing 5 aircraft, which takes a substantial period of time, right? And
Yes.
it's not like that every day I'm manufacturing aircraft and keeping the aircraft in my godowns. It is like a made to order inventory for me, which takes a substantial
Yes.
period of time. So if I have taken some funds from the bank, I have taken some borrowing or loan from the bank for the purpose of producing or manufacturing aircraft. So this aircraft is a qualifying asset for me. This is a qualifying inventory asset for me, right? This is not a qualifying PP asset for me. This is a qualifying inventory asset for me. So this amount, this interest cost is going to be capitalized as per Ind AS 23 in my inventory, which is my aircraft. So that is why, uppercase, it was required to mention that in lot of business, where every time the company is manufacturing, Nestle is manufacturing Maggi, and every month they are manufacturing thousands of packets of Maggies. In year, lakhs
Yes.
of packets of Maggies, every minute, every hour, double shift production
Yes.
is going on. So if the Nestle is taking a working capital loan for the purpose of manufacturing these Maggies, so these are the large quantities on a repetitive basis. So the working capital interest is not going to be capitalized on Maggies. आप कैसे allocate करोगे? 5 लाख क्वांटिटी बन गई, 10 लाख क्वांटिटी बन गई. So it is going to be charged to the P&L. इसीलिए लिखा था वहां पे.
Okay. That's way. Okay. Okay. Got it, sir. Thank you.
Any other question? Any other question, friends? If not, it's 10:15 now. Shall I conclude the session? So thank you so much, friends, and I hope you guys have enjoyed the session. You guys have been able to understand this short and sweet standard in Ind AS 23. Thank you so much. Bye-bye. Take care. Yes, session is over. Thank you, Sokji. Thank you.